Yeah.
All right. Ms. Susan. Well, just a reminder that we're recording this webinar to share later so you can rewatch it. We'll have it on the ASAP website for the next 30 days. So again, my name is Susan Melnick. I'm the Communications and Graphics Specialist here with the ASAP project. We are a USAID PEPFAR funded project, and ASAP stands for Accelerating Support to Advance Local Partners. Today's webinar is USAID Financial Policies, Internal Controls, and Compliance. So just a couple of quick notes before we get started here today. So once again, thank you so much for joining us. Go ahead and put your name, organization, and country in the chat so we can see where you're from. As usual in our webinars, we really like to use the Q&A box, which you'll actually find at the very bottom of your screen. You can certainly feel free to use the chat to communicate with other attendees and with those of us behind the scenes here today. But when it comes to questions, we really prefer to use the Q&A box so that we can track your questions and make sure that we answer them. So it's right at the bottom of your screen. You can go ahead and pop open that little box. And throughout the webinar, feel free to add your questions in there. Our presenter today, Doug Franke, has several stops for the Q&A portion, so we will get to it as we continue through the presentation. I have on here that we have one poll, but actually we have two polls today, as I mentioned. So we're going to have one right at the start of the webinar, and then we have a regular poll at the end as well. You don't need to do anything. They're going to pop up on your screen if you're using the current version of Zoom, and you can go ahead and fill in your answers, and we'll share the results as we go. And as usual, today's webinar will be posted on the ASAP website. This webinar will be posted for 30 days, so you can refer back for the next 30 days to this recording. And I will make sure to share that link in the chat in a few moments. So we have done quite a number of on-demand webinars for you all. Thanks so much to PEPFAR and USAID for making this possible. We have actually conducted 71, so today is our 72nd webinar. We've had over 14,500 attendees. And again, most of these webinars are available on the website for you to refer back or share with colleagues. Most of our webinars are also available in 3 languages. So today, this one is conducted in English, but many of our webinars are also conducted in Portuguese and French. And when you go to the website, I'll provide the link in a few minutes, you can actually filter by language. And on the website for some of the webinars, there is a PDF of the presentation that you can download and then the recording. We also try to share links to any additional resources on those pages. We do have a number of upcoming webinars. We tend to do one a week. So on March 16th is Optimizing Gender in the Workplace. On the 22nd, we have a French webinar that will cover program and data quality assurance and improvement. March 23rd, Doug Franke will be back to talk about subaward management from solicitation to closeout. And on March 29th, we have a business development webinar. And I will include the link for all of these so you can go ahead and get signed up today. And we also send a newsletter out every week that you can sign up so that you are aware of all the upcoming webinars. And now it's my pleasure to introduce you to today's presenter. If you've attended past ASAP webinars, you have probably seen Doug. He covers a wide range of information, and I know that you're really going to enjoy today's presentation. So Doug Franke is the managing partner for Sustainability Solutions, who is a consortium member for the ASAP project. And I'd love to hand it over to you now, Doug.
Great, thanks so much, Susan. And again, as you say, the fantastic work done by USAID and yourselves to enable these webinars is, I think, so important. As we've said, as USAID is now going to do more local local NGO support, I think it's fantastic that aid is enabling this project. And as it goes forward, hopefully all of you attend future webinars and take advantage of this. So with that, we have the splash slide, and as Susan said, ASAP accelerating support to advance local partners. But I think anyone can participate in these webinars. And if you eventually, even if you're a new NGO or someone not even working for a USAID program, you can still learn. And this is all about learning and sharing. So today, as Susan said, it's about financial policies, internal controls, and compliance. And yeah, that was me. So you can see that. I think all I want to say here is I have about 40 years of experience. I started working with USAID Cairo in Egypt in 1982. I was a Price Waterhouse senior then. And since then, it's pretty much what we do. The last 17, 16 years, Sustainability Solutions works with implementing partners like yourself. We are auditors, we train auditors, and we work with USAID and CDC to make sure the rules are understood and employed. So with that, we're quite excited to be here to share in this 2-hour or hour-and-a-half session everything we can. Now, a couple primary rules. Every question is a good question. As Susan said, that please put it in the Q&A, because the chat, there's hundreds of you online, and literally the chat's going, like a chyron on going across, and we can't capture everything. So please put it in the questions and we will answer it. I will stay on until midnight if I have to answer all your questions. So even if you're not getting a question answered, at each break, please know that we will stay on to answer them all. Okay, every question is a good question. There's a concept, what happens in Vegas stays in Vegas, meaning that I'm not sure if there's any mission people on today, but the bottom line is this is sort of confidential. Also, because we're auditors, many of you will have auditor questions, and I will wear the auditor hat when I'm answering as an auditor, because you should know the purpose of this course is to help make you bulletproof, to make sure every expense you incur is going to be allowable and you're not going to get hammered in your audit. So, we've had, as Susan said, there's many other webinars. Some of those are preparing for your audit and other things. Obviously, we can't get it all in an hour and a half. So today is sort of like the overview for financial compliance, and then a little bit about the internal control framework. So we generally we have load shedding or power outages here in South Africa. I think we are in a calm period right now where we're not supposed to be shedded, but we do have a generator outside and an inverter inside. So it's highly unlikely I will go off screen. If we do, it would only be for a minute. So don't stress. Okay, and then the other thing is, I have to assume, even though many of you could have more experience than me, I have to assume that you could be new to the USAID business. So, if I say a term or something that you don't know, maybe you could put that into the chat, and I will endeavor to make sure I explain each of the terms we use. Sometimes people say, listening to me is like drinking from a fire hose, and that's true, because my challenge is to get as much information out of here into your head. So that's what I'm going to try. If you think I'm speaking too fast, certainly you can mention that to Susan or Jeff or Fikre, the support team, and I will try to slow down. Okay, but we start with what we call the USAID puzzle. And this means that for many people, they hear about USAID and the US government, and it's just a jumble. It doesn't make any sense. I don't know what you're talking about, Doug. It's a waste of time. But over this course, and certainly over our longer courses, and certainly I know ASAP has many other courses that they enable folks to sign up for the scholarship program and things where you attend the 16 or 24-hour course. They come together much better, these pieces. But the concept is that over the course of today, I'm going to try to pull together these pieces for you and try to get to the point where we get to here. Now, of course, U.S. Agency for International Development is what we're talking about. But for me, that A stands for audit, okay? Because as auditors, and as we train auditors, and as we advise you on dealing with auditors, we, Sustainability Solutions and ASAP, want you to pass your audit. If you pass your audit, generally, then you tend to have fewer problems with USAID. Over all my years, rarely do I see programs get terminated or canceled or suspended because you didn't quite reach the target. Things go bad when your audit has rejected or you start having question costs and you pay back the money, and that's when things go downhill. Okay, so there's no doubt your performance is hugely important, But this course is way more about the financial management and compliance. So the first poll that Susan referred to, I'd like you to give me, we tailor this course, even though it's only 2 hours, we still tailor it for you. So I'd like to understand, what is your current relationship with the US government? Are you don't have anything whatsoever? So just click on the box there and click on A, B, C, D, or E, or F, and then we will see the poll pop up at the answer. The reason this is important is because what we're going to hear is there's different rules for different people. When I say people, different organizations. And it's good for us to know, who are you? For example, IntraHealth, FHI, CARE, Save the Children, those that are based in the US have one set of rules. For those of us who are non-US organizations, there is what I'll explain is the light version of the rules. And again, I'm going to ask you to put your hand up a little bit later to see if you also get funding from CDC. This is certainly a USAID focused course, but the reality is there are some different rules, significant ones on the CDC front, that it's just good for me to know. So, but the bottom line here is, I would say when we get to 1.5 minutes, we can put the poll results up, and that lets us focus on your specific needs. Okay, a lot of people don't realize that what applies to IntraHealth in the U.S. That may apply to IntraHealth in Ethiopia. We just finished a huge webinar yesterday for Ethiopia ASAP, about 30 different NGOs. But their rule for those NGOs is actually different from the ASAP team. ASAP Ethiopia will be using the U.S. set of rules, whereas their partners will be using what we'll call the foreign rules. And we'll go over that. Okay, also, I'm going to talk about, so here we go. Fantastic. Let's see what we got. Okay, so thank you all who answered. Okay, good to see some fixed amount awardees. We'll talk about that. A number of subs, number of primes, a lot of primes with subs. Okay, and then certainly some audit or audit related. Okay, so certainly it's a prime and prime with subs program that I'm going to look at. Subrecipients, yeah, because you're a sub under a prime, that relationship is going to be hugely important. Okay, thank you for that. Okay, so let's start out by talking about relationships. And first, I'm going to go to this slide, but first I'm going to go to the next slide, because I want to talk about the relationship between the US government officials and our people as primes, and then subrecipients. So I'm going to try to talk about the importance of relationships and understanding who has responsibility and who has authority. Okay, now mostly we are interested in this webinar about responsibility over financial issues and compliance issues. Okay, it would tend to be, and on the next slide, I'm just going to go over who are these people. So let's just first look at here. We've got our agreement officer, and he or she is the one who crafts and creates our award. Next to that is the agreement officer's representative. What I'm going to do is I'm going to change my pointer here to being this one, so it makes it a little easier. The AOR, agreement officer's representative, he or she would normally be in your country and possibly a national of your country. So many of the AORs in Ethiopia were Ethiopians. They could be from anywhere, but they tend to be local people. The important part of this person is he or she has what's called substantial involvement. And they're the ones under a cooperative agreement who will be involved in your award. Next, we have the OFM, Office of Financial Management, and that's the controller's office. Normally, the controller would be an American CPA, certified public accountant, and he or she would have possibly, depending on the size of the mission, could have a second assistant controller, deputy controller, and that would be the one that would be managing the audits. Okay, but that team is quite important from a finance point of view as well. And then we have up here, I'm talking to you from Johannesburg, South Africa, where Sustainability Solutions Africa is. But up here, about 20 clicks up the street, we have our USAID Inspector General. That's called the Africa Regional Office. And I will say to all of you, even though the IG doesn't really deal much with you recipients, the IG oversees the mission and what the AO is doing, and they work with the auditors. They do what's called desk reviews of the audits that you're going to have. But there's no reason why you can't reach out to the IG if you may have audit questions. Now, it would tend to be OFM, the financial management people, that will be dealing with you when you have your audit. Okay, but certainly the RIG, people are afraid of the Inspector General. I mean, they are incredibly nice people, and our current RIG, Regional General Robert Mason, fantastic person, knowledgeable, approachable. So don't be afraid if you have to reach out to the IG for certain questions. Okay, so basically, let me go back up here to talk about relationships then. I'm going to go up. Let's get out of that. So let me go here. Okay, so what I want to talk about then is back up here about relationships. It's important that you have as constant communication if you can. Okay, I'm going to kill that one there. And the whole point would be your AOR is generally the one responsible for integrating your challenges, or not challenges, your M&E, your program, even some of the finance stuff will have an AOR component, but realize anything financial will need the agreement officer's concurrence and things like that. The agreement officer has what's called a warrant, and he or she is able to give you more money, obligate you money, release funds, and things like that. So it's quite important that your relationship with all officials are strong, but from a financial point of view, please make sure your agreement officer is aware of what you need. The next bullet point talks about officials having roles that need to be understood. So you need to understand who, as I said, who has which responsibility and authority. Now I'm just going to think, Jeff here, how do I kill this? How do I kill that pointer there? I wanted to point to it, but I don't know how to kill it now. You could see if you could get in there and kill that, possibly. Okay, so the AOR, as I said, is going to be important, and understanding where one finds this. Please keep a pad next to you and take down some of these references I'm going to give. And Susan said she could send them at the end of the webinar. I will have my email address as well. But the thing is, I'm going to say you're going to find it here, and if you can't find it, we'll find it for you, or we'll just send it to you anyways. Okay, but the whole point is that some things OFM certainly will be processing your information, your vouchers, your invoices. Sometimes the AOR will have to approve them to make sure she or he understands your burn rate, your cash flow, things like that. But ultimately, the AOR, from my point of view for today, that is your most relevant person. So the AOR crafts your prime award, and then a prime certainly is going to be performing some of the work or all of the work, depending if you're only a prime. But many of you are primes with subs recipients, or you're a sub yourself. So let's just talk about that. A prime that is going to have, and just for FYI, the course on the 23rd that Susan referred to is about subaward management. So it's a whole hour and a half to 2 hours on subaward management. So if you're a prime with a sub or a sub, you're going to be a prime with subs, please join that webinar. But the bottom line is there's two different types of subs. What we call a large sub, that's those who spend more than $750,000 in their fiscal year. That sub will be subject to an audit. Okay, the small sub is that who expends less than $750,000, and they won't necessarily be subject to an audit. Okay, so it's important that way. And let me put my auditor hat on for the first time. Okay, what you need to realize is that if I'm your auditor and you're the prime, okay, I'm going to be relying on you much more that you're what this next box here, subrecipient management team, have you done the job you're supposed to do? And that's what we're going to talk about heavily on the 23rd. Okay, I have to rely on your people when I'm signing off on your audit. Okay, if I'm the prime's auditor and there's a large sub, that sub is going to have its own auditors. Okay, and I'll be able to rely on those auditors. So all I'm saying is the prime with subs has huge risks. That prime with sub, you are responsible for all the funds that pass down through you. So that's very important that you manage your subs. And I go back on to that earlier slide. Okay, as we say here, USAID and CDC are bound by rules, and there's, in theory, there's limitations on how demanding the U.S. government can be on a prime. But there are no limits on how demanding a prime can be on their subs because they are responsible for the funds that pass through them. Okay, so I point out to this AO role, that's a hugely important responsibility because those folks, they have to serve as an AO. It's called standing in the shoes of the agreement officer. Yet, unless they are retired agreement officers, they're not going to be as competent as a real AO. So that's a tough role, and I think those people certainly need to be on top of their game. Okay, as I mentioned, this SRMT, that's sort of more of a responsibility. It's not necessarily a person, but it could be a number of people. It could be also the internal audit group that we'll talk a bit about. But the whole point is to manage not just the small subs, but the large subs as well. Okay, so you could have some questions on this, but I'm going to move forward. So this very busy slide here is a picture of what we'll call now the new uniform guidance. The green boxes are what I'm going to talk about. Most of these other boxes, you'll see some red X's. Those are the things that have fallen away. Those were previous rules, but many people still know the rules by the old names. By now, we should be talking understanding UG uniform guidance. Okay, so certain things happen before we get our award, and that's when USAID in this position performs the pre-award surveys. That's many of you were part of the ASAP consortium exercise where those pre-award surveys or NUPASs were performed on you. And that's what the US government has to have. Either they do it themselves out of the controller's office, they assemble a team, or ASAP does that as well to do it for the mission, on behalf of the mission. So that happens before you get your money generally. Subpart D is, notice it's post-federal award. And that's what happens once you get our award. So I'm going to explain that basically USAID is an agency that works, of course, mainly overseas, and they were able to adjust the uniform guidance for them. And so what I'm going to say is everything USAID wants non-US organizations to follow, they take out of here and they put it into the standard provisions that we're going to talk about in a few more minutes. Those are called, we call those the mandatory standard provisions. Okay, so that's why I say it's a light version of the rules. So IntraHealth, FHI, CARE, Save the Children, they all have to do the full, they have to comply fully with this subpart. We overseas folks get a light version of this, which comes with some strengths and some challenges. Subpart E is the cost principles. So these are the building blocks of your award. And subpart F is beyond this discussion here, but that's auditing, and we can talk about that if you have any questions. The whole point of this is I put the COAG in the box. What does that mean? It means that what takes precedence, if I'm your auditor, what I'm going to do, I'm going to look at your award. And I'm going to say to you, you recipient got this award from USAID. You must follow what's in your award. Okay, read your award. Certainly, we've got a couple of rules. One of those is read your award. And I'm going to say right now, for the first time, you should have a compliance officer who reads the award, who does a search on the word must and should, and I'll explain that later. And everywhere there's a word must, suggest that you follow that closely, because that's what we auditors look at. We say, you must do that. USAID gave you the award. If you don't do it, it could end up being a finding, which I'll talk about at the end of the day. Okay, you don't want that. You don't want findings. So what I'm saying is the agreement officers, those very smart people in your country, they know these rules. They study B, C, D, E. Okay, so the whole point is they will not put together an award that will be breaking the laws of your country or impossible to follow. Okay, so read your award. So here I'm just showing, again, all these red X's. We don't have time to get into what they were, and it doesn't matter. The bottom line is all of those created the new, what's called the uniform guidance. And it is at 2 CFR 200. And I'll go there very briefly just to show you how to get there. Okay, so 2 CFR 200 point XYZ is what your XYZ, that's what the rules you have to follow. Okay, so you should definitely get this in your browser, bookmark it, and you'll be able to follow the rules. 45 CFR 75, that's the CDC or Health and Human Services version of the uniform guidance. And the bottom line is Health and Human Services is the largest US government agency. You know, they don't do too much overseas, maybe a little NIH and CDC, but the bottom line is they were able to keep, they basically put the uniform guidance into their own section of their code, and that's where you would find their rules. okay? But what I'm saying is this 2 CFR 200, I'm going to go back up one slide, talked about subpart D, what I said USAID did. What they did is they said, let's look at this huge requirement and let's create the non-US standard provisions that non-US organizations have to follow. So you're going to read your award and you're going to follow the standard provisions and follow the cost principles. Okay, no Q&A, that's fantastic. Maybe just someone put in a Q so we know it works, but I'm sure it does. Okay, so here is a picture of the Code of Federal Regulations. Okay, I'm gonna do a share screen now, and I'm gonna get into that uniform guidance and show you how to get to where you need to be. Okay, it's gonna come up in a second. Share, let's reshare. Okay. Here it is. Okay, so I am, let me know if that comes up. Hopefully you are seeing a title 1, 2, 3. Someone put your hand up, please, if you can see that.
Looks great.
Got it, thank you. Okay, so where we are going to go is Title 2, grants, sorry, to get here is www.ECFR, Electronic Code of Federal Regulations. Okay, then you'll be your splash screen. You want to go to titles, your options, grants and agreements is what we want. Title 2. Okay, then Title 2 pops up, and then we want is 2 CFR 200. So you see over here, there's a 200. So we'll click on that one. Okay, and then up pops the different parts. So right now, this is what you'd want to bookmark in your browser. And I'd call this my USAID CFR. Okay, and then I certainly don't have time to go through, but I just want to say subpart A is all the acronyms and definitions that you need to understand. Fantastic consolidation from every agency of the definitions. Subpart B, general provisions, pretty much not for you, but it's the rules about this uniform guidance. But it's in there where it said that every agency has the ability to alter to a degree what's required, and that's where USAID took that opportunity and created the mandatory standard provisions. Subpart C is what USAID and CDC and everyone has to do before giving you money. Okay, and that's why they sometimes would use people like ASAP or others to perform those NUPASs. And then subpart D is what we would be, well, mainly we're going to be talking about today. These are all the requirements, the compliance requirements that you would have to comply with. And then E would be the cost principles. Okay, so I'm just going to leave it at that. That's where you find it. And let me just go into D just to show you one more level. So subpart D starts here, and we're going to be, well, we would be talking about many of these things. I just want to highlight that in terms of, we have internal controls here at 303. That's the second part of this course this afternoon, and I'll be covering some of the important points of that. Okay. So again, any questions, you are welcome. I'm not going to go deeper into that because we don't have time, but certainly that is what I want you to be aware of. Okay, now let's talk about the wording that I just said, must versus should. In that 100 section, they explain to you, this first came out, even though the uniform doesn't change too often, it came out, and only in the introduction when they had the webinar that the OMB explained the use of the word must versus should. And it's very important that eventually they realize this is so important, we better put it into the uniform guidance. But realize that there in the guidance itself, there's 884. We did a search on this. In the standard provisions that apply to you non-US organizations, there are 351 of these. Okay, so putting on my auditor hat, let me just explain. Your job is to comply with all of those musts. Our job as auditors is to see that you did comply. Okay, now our teams are not going to go look at all of these, but we will be looking at the ones that have could have a financial effect on your financial statements. So this is where your compliance officer, the person who gets your award, searches on musts, finds all these, and then determines with the finance team which one of these, if we don't do, could cause, could relate to financial problems. Okay, that's what your auditors will be looking at, probably between 20 and 30 of these musts that could cause could affect your financial statements. Okay, so you may as well just be pre-armed, perform the search, go through them all and take a look at them and say, geez, which one of these could cause us a problem if we don't comply? Now, your cooperative agreement created by your agreement officer, they're structured this way. They're all the same. There's an attachment A, which is called the schedule. And on the next slide, I'm going to go there. Attachment B, program description, is pretty much what you propose to do in your proposal. And so USAID may have said, okay, you guys in Nigeria or Tanzania or wherever you're from, we need 10,000 people on care and treatment. And then when you did your proposal, you said, great, here's how we're going to do it. Here's my team. Here's our approach. Here's our footprint. Here's how we're going to do it. Here's our program, our plan. And pretty much they just put that back into that attachment because that's the agreement. That's what you promised to do. Attachment C, the reason that's in red is because that's pretty much what we're talking about today, compliance. Those musts are, there's 300, as we said here, there's 330 through 51 musts in these standard provisions. So compliance is all about understanding what we must comply with and complying. D is marking and branding. That's not this course. Okay, so in that schedule, attachment A, this is where the agreement officer puts specifically what applies to you. So this is the detail. If you read nothing else, and I would think everyone in your program would at least read the schedule because it has what you're going to comply with and what we auditors are going to audit. So it's going to have the budgets and all that kind of stuff, all the dates, all the deliverables in terms of your quarterly, semi-annual, financial, final, and closeout reports. All of that's going to be in there. Monitoring and evaluation, it'll be hugely detailed. Which dates things are due, read it. And then the things that are unique to each organization. Who gets title to the property? You, the local government, or the US government? Do you have an indirect cost rate or do you have the 10% de minimis? If you generate program income, there's 3 different methods to keep it. You grow the program, use it as cost share, or they deduct what they're going to give you. Cost sharing, what is it? Cost sharing now has to be an amount, no longer a percentage. Geographic code, where can you buy stuff from? 935, 937, all that's in your award. So you need to be very aware of that because we certainly are. I just want to highlight down here A14, special provisions. This is where when USAID evaluated you or the ASAP team evaluated you and they identify or we identify weaknesses that will be put into your award. Your timekeeping isn't adequate. Your procurement's not strong enough. You don't have adequate travel policies. Your fixed asset management is weak. And so in there, they'll put in within the next 60, 90, 120 days, you must fix this. That's the first thing an auditor will do. They'll go to look at what your award said about special provisions, because if you didn't do those, again, you could lose your award. And then I'm finally going to go to here, A16. Again, the numbering will be different depending on the size of the organization. But the bottom line is they're going to say, you have mandatory standard provisions that apply to you as attachment C. That was what I just said here. That's this. That's what you need to comply with. Okay. That's what they look like. It is noticed that at the bottom here, there's little numbers. So ADS means Automated Directive System, and it is a series. It's like the US government policies and procedure manuals. And this one, ADS 303 MAB, small case MAB, that's the one that applies to non-US NGOs. 303 MAA applies to US NGOs. Okay, so this is what you need to comply with. Do the search, find the musts, comply. So again, why is it necessary for you to understand these rules? Well, you are spending the millions of dollars, so you have to administer it. But we auditors are going to use your same award and those same rules to audit you. So we all need to play by the same rules. And that's why I think ASAP is great, and USAID frequently participates in some of these webinars. And we ask OFM, what's your point of view? And we get the IG on sometimes. And certainly frequently we have agreement officers just to clarify what is it that you want you recipients to be aware of so you can be compliant. And the final point here is, it's so important going forward that the USAID will just say is part of their evaluation of going forward to you to get new money is how did you do with the current money? Okay, and your AOR is going to evaluate you, I think 60 days after your award. Similar on the contracting side, it's called the CPAR, Contractor Performance Assessment Report. There's something similar now for the AOR to assess you, and that will play heavy on whether you're going to get new money or not. So, being compliant is not that hard. There are many rules, but there aren't that many difficult rules. Okay, so there's what we call 4 levels of maturity of a U.S. government relationship. And the first one, so, are you ready? And we use running as an analogy. So the first level is called a fixed amount award or a fixed amount subaward. Okay, and USAID, the one thing, if you a fixed amount subaward is like a baby contract, or it's like a baby cooperative agreement. But it's so much easier to deal with because there's a couple salient points. One, okay, it's 3 for overseas. If it's coming from a prime to a sub, they're limited to 3 years in duration. Okay, they are limited to what it's called the simplified acquisition threshold, which is $250,000. But there's no limit on how many of these you can have. Okay, they are not auditable. Okay, so that's quite lucky for a prime to say, I'm just gonna give this fixed amount subaward. But what they are based on is deliverables. Okay, so you would use this rather than a subaward because all you're trying to do is get maybe monthly reports or some activity out of an organization that can be broken down into milestones, and then you're paid based on performance. It makes it quite easy. Okay, this is much easier to administer than a subaward because they're not audited. But and again, they're 3 years in duration, but and limited to 250. But generally, your tasks aren't going to be bigger than $250,000. And as I said, you can have multiple ones. So consider this before considering a sub-award. And so their knowledge of U.S. government is very limited. There's no relationship between a fixed amount awardee and the U.S. government, and also the cost principles do not apply, funny enough. Okay, so we have a digital pack that we'd happy to send you or send to ASAP, but basically it's a folder that we put in 4 fantastic documents that USAID's put together on how and when to use a fixed amount subaward. Okay, next, we would say the subrecipient level, and here you are, if you spend more than $750,000, then you're going to have the audit. The cost principles do apply to you. But the important point here is, as I showed you earlier, the sub does not have a relationship with USAID, which could be good or could be bad, depending on, on what you're trying to achieve. But the whole point, as I said earlier, the prime has a relationship, the sub doesn't. So in that sense, the prime can act as a buffer of having to deal with the U.S. government, which sometimes can be difficult, as we know. Okay, all I'm going to say is if you're going to enter into a prime sub relationship, I think it's hugely important that you make sure you agree on levels of effort and you agree on what portion of the what happens if the budget gets cut, because frequently budgets get cut, what happens to our share and that kind of stuff. Also, I strongly recommend you have a arbitration mediation clause, because what happens is subs, if for any reason you're unhappy with your relationship with the prime, you can't go to USAID and say, I'm unhappy. You must only deal with the prime. So it's important you know who you're getting into a program with, into a consortium. That's why we love being with IntraHealth, because they are a great prime. Okay, rarely is there ever anything we ever have to discuss. You want that same relationship between your prime and your sub. Then the next level is a prime recipient without a subrecipient. So you're just a normal prime. As you can see, the maturity of these runners have gotten very advanced. Okay, these guys are just starting out. They're all in the same direction. Certainly at the high school level, they're more serious. At the prime level, this is the real deal. You have everything. You've got the relationship with USAID. You are going to be audited, probably. You're going to be over that $750,000 threshold, and you are at risk. Okay, you make a mistake, you're at risk. So all these people they're very serious. They know what they're doing. It's an advanced stage with the U.S. government. The next level is a prime with a sub, and this is your Olympic or global level. The national level here is where you come with serious risks. And a lot of people say, ooh, I want to be a prime with subs. Do you? Think about it. Okay, because it comes with a lot of risk. So, these guys have been training for, 15, 20, 30 years. And, the analogy for you is don't think you can be a prime with a sub. You can't race at this level when you are starting out, when you're here. And unfortunately, I'm working with many countries where the missions are saying, no, we're going to take subrecipients and we're going to make them primes, and then we're going to make them have some subs under them. And I'm saying, be careful. That's a bridge too far for many NGOs. So, don't ask for this unless you know you're ready. Okay, so what's the goal? The goal for me is not for you to win. The goal is to cross the line and pass your audit. Okay, this guy may win the race, but these people are not losers, right? And certainly they're crossing a 1/10 of a second behind. But our analogy for you is be compliant, play by the rules, and pass your audit. Okay, very briefly. So the cost principles changed in the uniform guidance. And many of you remember I think we're going to do a Q&A here soon. I'll tell you what, Susan, let's just take a break right now. And why don't we go to the questions? Would you like to read them? I see that there's 4 there, or if you'd like, I could read them.
Totally up to you. I'm ready to read them if you'd like.
Great. I'll give my voice a break. Go for it.
Okay, sounds good. So one of the first questions is about the 10% de minimis. They're wondering if it requires prior USAID approval to spend it, and what are some of the rules?
Okay. So the 10% de minimis, which came into play on December 26, 2014, is currently, and the rules have changed as it's gone on, but what it does say is, and now, it's so great that you asked it, because this is going to be covered in detail in the course on the 23rd, so sign up for that one. But the bottom line is the USAID is supposed to give the 10% de minimis to a prime, and the prime is supposed to give it to the sub. Now, there are caveats. Possibly, if that subrecipient exists only with that one project to serve the US government, then it's possible that they might only have other direct costs. So they don't need the 10% de minimis. But generally, the expectation is that primes would get it and they'd give it to their subs. And there's good reasons for that, okay? Because a lot of times subs don't realize that they're going to need funding for certain extra things that they didn't budget for. And same thing for the prime. Prime, you are going to be responsible for managing those subs. And there'll be times when you certainly need your 10% de minimis, because you can't picture everything. You can't plan for every possibility during your budget. So it does say, take this down, it's 2 CFR 200.414 subpart F for Freddie. Okay, and in there it says any organization that does not currently have a NICRA, a negotiated rate, may elect, it's an election. You elect to have the 10% de minimis, okay, and the base is modified total direct costs. Okay, then the new sentence that they added in within the last year is no documentation is required to justify the 10% de minimis. Okay. Now, does that mean it's free money? No, because the next sentence goes on to say you have to be able to give comfort to the mission that you're not double charging or inconsistently charging costs as both direct and indirect. Okay, I mean, 10% is a bit of an area that does take additional guidance, but the bottom line is, yes, you are supposed to get it, and I would certainly recommend that all of you do. Okay, next question.
The next question was that they were wondering about the website for the rules that you showed. If you could possibly show the web address again, I could go ahead and share it in the chat so it's clickable for everyone.
So the rules are at www.ecfr.gov, electronic code of federal regulations.gov. Okay.
Excellent. One of the next questions was, they were clarifying, did you say fixed amount awards, FAAs, are not auditable? Does it mean even after spending 750,000 USD, the Yellow Book audit does not apply to FAAs?
That's correct. Fixed amount awards or fixed amount subawards are not auditable. You could have $1 million of fixed amount awards, they're not auditable. So that's where it's so important when setting these up. And that's a great question. And that's why I'm happy to send Susan or you the pack that is clear on the important thing about a fixed amount subaward is when you set it up. Because remember, the cost principles don't even apply. Look at 401, I think it's C, 401(1)C says doesn't apply. But of course, you have to know if I'm going to ask you to go out and do a survey of 1,000 people each month, you should have an idea of how much that should cost. So it's all about setting up the costs and the measurables and the deliverables up front, and that's it. If they deliver milestones, you pay. Okay, any other questions?
There is one, but I'm not, oh, there is one more question if you don't mind.
Great.
I'm not entirely sure what they're asking. They're asking if there's anywhere to find the 04 level types of awards or rules in one set. I'm not sure.
You mean of what I just showed you? No, I'm not aware. I mean, fixed amount awards, I just showed you. I told you it's hard to find. It's 303.3.15, but that's in your digit. Again, if you ask, we'll share that with you. That's that one. But just a prime and sub and primes with subs, that's just all, learning how to be complying and managing your sub. Certainly, I mean, subawardees and primes is just following the rules. Being a prime with a subrecipient, that is at 2 CFR 200.332 A through H. There's 8 items that's where the guidance is on how to manage subrecipients, okay? And that's quite important. 332 A through H. Okay, we've got another one, Susan, if you want to read that.
Yeah, we have 2 more actually. So
okay.
One is at the end of 3 years for the application of an FAA by a subrecipient, what type of agreement do they transition to?
They could stay on fixed amount subawards. They could transition to a subawardee. They could transition to a prime. I mean, if they're ready. So, I say that it's a transition, but you could start. Many of you probably started as a subawardee. But a lot of people don't realize the usefulness of a fixed amount subaward, and that it is not auditable. That's very clearly, we auditors do not look at that. What we would look at, I'm going to put my slide back on. What we look at is, you're the prime, you had a fixed amount subawardee. I'm going to look to see, I'm going to look at the subaward for the amount and see from a milestone point of view, what was that guy supposed to deliver? And then did they deliver? No different than I'd audit you of, did you buy a proper vehicle? Or did you buy a antiretrovirals? Okay, I'm looking for delivery, and that's it. The measurable is the milestone in a fixed amount subaward. Okay. Next question.
The next question is the 10% de minimis auditable?
No, it is not auditable. It says that, I'm not going to go there, show you now, but from day one, it very clearly said it is not determinable. Okay, an indirect NICRA is auditable, of course, very much, but a 10% is not auditable. And as I said, you don't have to justify it. So a lot of people think it's free money, but I'm still expecting you recipients to be able to prove to the mission that you understand. I use the phrase cost policy statement, a CPS, and that's the beginning steps of when you're going to apply for a NICRA. And I suggest to the missions, don't just give the 10%, even though it says you don't have to justify it, because the next line in 414F says they still have to be able to, I think, prove that they understand the difference between direct and indirect costs. And we're going to be talking that here in about 3 more slides when we talk about 405 allocability. Okay, so that, let's just park that for that, but yes, it is not auditable. Okay, thank you.
We have a few more. Did you want to go ahead or hold off?
Let's take a few more. Now, I do see someone has posted indirect costs again. Now, it's going to be hard to you obviously can't deal with that. So for that person, let's save that one and I'll try to deal with it afterwards. But just in there, you don't have, I'm just going to tell you, the anonymous person, you don't have an indirect cost. You don't have the 10% de minimis. So effectively, you have direct costed everything. So a lot of people, after this course, they say, oh, now I want the 10% de minimis. But here's the challenge. If you didn't get it at the beginning of your award, primes, if you didn't give it to your subs, it's awful hard now to add it because, and I talk to AOs all the time. I say, what do we do here? And you say, look, it's tough. We gave you a 5-year award. We gave you the money. We gave you money for your subs. And now you're coming back and asking for more money. And it's very difficult. Okay, so literally from day one, when you're preparing for your next proposal put in the 10% de minimis. Okay, I was just speaking with an AO because we did some training, and I won't say which country, but I worked with this controller. Sorry, I worked with this controller in many other countries. And in that country, the AOs are giving the 10%, and the AORs are saying you can't have it. And I said to the controller, how can this be? He goes, no, that's wrong. In this country, we want people to have the 10% de minimis because he knows the value of it. Okay, so let's assume going forward, you should get it. And here, take this down. It's 2 CFR 200, 332, Part A, subpart 4. Okay, and there's a under 4, there's a 1 and a 2. But under there, it specifically states that primes must give to a sub either the NICRA if they already have one. So say IntraHealth is going to be a subrecipient under you. Say you're a Tanzanian prime or Nigerian prime. IntraHealth's a sub under you. You have to give them their NICRA because the U.S. government has negotiated with them. You can't beat them down. You can't say give us a discount. It is what it is. Then it goes on to say if they don't have a NICRA, the prime can negotiate like a baby NICRA, but just with that relationship. It's not a formal one. You can either do that or give them the 10%. Those are your options. Okay, so truly, but now backing into it after the fact becomes almost impossible because it generally is going to require more money. Okay, I'll leave it at that, and we can beat that to death later on. Okay, next question. We'll take them.
The next question is, what is the difference between grants and cooperative agreements, and which one is preferable? Okay,
a cooperative agreement, which most of you have, is where the U.S. government is going to have substantial involvement. That's what the AOR does. They're substantially involved in what you are doing. They're monitoring, evaluating you, watching over you, maybe providing many sorts of advice and guidance. Okay, that's a cooperative agreement. A grant does not have U.S. government substantial involvement. Okay, so they just agree up front. The example I like to give is like Mozambique has a hurricane or a tornado, and it destroys a city. And USAID says, we're going to help. So we're going to build 10,000 houses. And so they say, okay, who can build houses? Habitat for Humanity, someone else. How much is a house? $5,000. They say, great, here's a grant, go build X number of houses. We're not going to get involved. We're not going to oversee and say you're mixing the cement wrong and the roof has to be this way. It's just go do it, deliver, do your best to deliver under a grant. Cooperative agreement has substantial involvement. That's what the AOR's job is. Next. So it's not preferable, it's horses for courses. But obviously a grant is less interaction with the U.S. government.
All right, next question is, do assets acquired through the FAA have to go through the disposition process like cooperative agreements?
Okay, so that's an excellent question. So generally under a fixed amount award, there shouldn't be a lot of assets purchased. So, I mean, I'd have to look up that one specifically because it would be pretty rare. None of the FAAs I have seen are for assets. It's more for activity. So I can't give you an absolute yes right now, yes or no, but I would doubt whether it would because they wouldn't be substantial. But I mean, go look at, again, I'll give you the email. I'll send you the 4 U.S. government documents. It would be specifically in there. Okay, good question.
Next question is, I think you touched on this, but just a clarification. Is it possible to negotiate the 10% de minimis at the middle of the implementation, say when negotiating for a no-cost extension?
Okay, anything's possible, but it's unlikely. And here's the reality. So when this came out, I went to different missions across Africa and trained just USAID people themselves. And between the 4 walls, the question is this question came up because I said, what are we going to do? It's a must. USAID, the recipient has an election and you're supposed to give it to them. But what if there's no new money? Well, it has to come from somewhere. And of course, we had technical people in and finance people and the agreement officers. But the bottom line is, if there's no new money and you have to get the 10% de minimis, then where's it going to come from? Well, it's going to come out of program. And no one wants to see the program cut. No one wants to see, well, our goal is 1,000 orphans, but we can only handle 800 because you get the 10%. So that's a tough question. I've never seen, and again, asking many different AOs, I've never seen where after the fact it has been allowed. Yeah, they recognize it and they all say, we wish there was another way, but I think that would be quite a difficult ask. Okay, good question.
Next question is, for contract, should a prime pass to the sub the fixed fee if there is one?
Well, again, for a contract, should a prime pass to the sub the fixed fee? Well, in a contract, a contractor is going to have their own fee and a subcontractor would have their own fee. So the subcontractor's fee would be in the subcontract. Okay, and that would be the prime is going to have their contract with their fee, and the sub's fee is going to be actually in. I mean, it's a contract question. It's not really this course, but the sub would certainly get their own fee. Now, take the 10% de minimis. Okay, the 10% de minimis gets added into the sub's budget, and that's just a line item as a subrecipient on the prime's thing. The prime doesn't add the sub's 10% into their 10%. The prime has their own 10%. Okay, now the 10% is limited and to only $25,000 of the sub's activity. So it's not like you're going to get a huge amount of 10% on top of your subs. Okay, that's beyond this course for the time we have. Okay, next.
Next question is, does an FAA conform to the cost principles?
No, it doesn't apply. You look at 401 I think it's 3 or 4. It's there to where it says specifically the cost principles do not apply to fixed amount awards.
You may have answered this one. Is there a CFR provision that says FAAs are not auditable? I believe you had mentioned it, but I could possibly put it in the chat if people need to get the actual information.
It is in the USAID guidance very clearly. It's in there was a controller named Chuck Pope. Okay, Chuck is he's still there somewhere in the world, but when he was in India, he worked with his team there, and they put out some guidelines, and very clearly there it says it's not auditable. Okay, but I mean I can't give you chapter and verse right now, but trust me, it's not auditable. I could find it, but I can't tell you it's 383.6, whatever. It is there. It's true. Okay, trust me, I'm a doctor. Actually, I'm not a doctor, of course, but trust me. Okay, next.
So next question, one more 10% de minimis one. Is it a must for the prime to pass over the 10% de minimis to the subs, or can they choose to absorb all the subs' direct costs?
Okay, so great question. And I think it's evolved that people realize that it is good for the subs to get the 10%. But when the uniform guidance first came out, there's a group called COFAR, Council on Financial Assistance Reform, run by Gil Tran. Okay, very smart guy at the OMB. So they have a question. Matter of fact, ask me for Doug, please send me the COFAR Q&A. Okay, they had 3 of them. And the last one, it was all the important things you need to know about the uniform guidance and your situation. Okay, in there, a specific question was, dear COFAR, my prime does not want to give me the 10% de minimis. What should I do? And the answer from on high, above every agency, says, inform your prime that they are subject to debarment or suspension if they don't give you the 10%. Okay, so generally you should get the 10%. Now, of course, you'd never say that to your prime, but the prime should have to justify why they're not giving it to you. Now, the whole point is, but as I said, if your only existence is one project in one country, and then I think the prime could say, just direct cost everything. And when a few more slides from now, when we get to 405, when we talk about direct costing, that's what you could do. Every cost related to the project for you to be in business would be applicable. Okay, so while I'm on that topic, let's just hold off on them, because I want to highlight here down where we have the bold principle here. This is the beauty of the U.S. government. The U.S. government will bear its fair share of costs unless where it's restricted by law. So the U.S. government is very fair. You just have to know what to ask for. Okay, and that's what we're going to talk about in the next couple of slides. You got to know they'll build their fair share. They don't want to pick up the EU's program, Gates, Global, any other GTZ or GIZ. They're not going to pick up the German overheads, but you have to know and segregate your costs from other organizations' costs, other donors' costs. Okay, so here are the 4 overarching concepts that I'm going to try to quickly get through. So as an auditor, I'm going to audit not everyone. I'm going to do a sample, of course, but I'm going to audit that every cost or every type of cost that you charge U.S. government is all 4 of these things: reasonable in amount, allocable, the right share you charge the U.S. government, allowable as per the cost principles, section 400, and supported or documented. Okay, I'm going to look at all those, and if it's not all of those, then I will question that cost, and hopefully I'll get to that by the end of this presentation. Okay, that's what I'm going to look at. So what is reasonable? This is called the prudent person rule. The prudent person rule, extremely briefly, is we are all prudent with our own money. When you get your paycheck, you got your paycheck last week, you knew where it was going to go: food, rent, kids, school, petrol. Okay, they say, the U.S. government says, be as prudent with our USAID money as you are with your own money, and that's reasonable. Okay, that's the overarching concept. Then it goes on to say other sorts of things. Did you need to incur that cost for your project? So this is where, when we're doing our proposals, we should be justifying why we need a vehicle, why we need a boat, why we need a generator, why we need whatever we need to do our jobs. I've got 1,000 orphans. I need 1,000 beds. I need 1,000 bed nets. I need 1,000 school packs if the kids are going to be going to school. Document why you need those activities for your project, and that's effectively reasonable. The other important point, and given the time we have, is the concept of market prices or competition. The U.S. government loves competition. Okay, but the bottom line is you need to be able to prove to me, the auditor, that you did try to reach out, and all this procurement stuff's we've had a different webinar on that, but all the procurement stuff is important to show the auditor you were able to get multiple quotes. Now, if I was to say to you, if we had time, I would ask you, and we'd look at the chat and say, how many quotes should we get? And 95% of us would say 3. And that's certainly, it's a good idea to try to get 3, because that stops collusion. But from the U.S. government's point of view, this is in the FAR, Federal Acquisition Regulation, adequate competition is 2. Okay, now, of course, I say get 3. When I'm writing your procedures, I say get 3. It stops collusion. But actually, 2 is adequate for the U.S. government. 2 quotes, or even 2 attempts to get a quote. But that's in the procurement section. Okay, so the bottom line is, try, when you get your award, go out and find your preferred vendors and show your auditor that you've got a list of people you are going to get quotes from. That helps me say the cost that you ended up paying is reasonable. Allocability, if I only had 3 minutes in this webinar, I would spend 2 minutes on this. Okay, this is where people get it wrong, and you don't realize what is allowable. So basically, you have to allocate the U.S. government its fair share of the cost. So most of us have a project, and the concept is U.S. government will pick up its fair share, but how much of your cost did this USAID project receive? So the next page is more descriptive. Okay, and also consistency. As an auditor, I'm looking at 2 things. 1, consistency between last year and this year and next year. Did you change your methodology? You shouldn't be doing that unless you've got a good reason. And then consistent between the projects. What am I charging the USAID project, my EU project, my Gates Global Fund, whatever else? I want to see consistency there in how you're allocating costs. Okay, so what am I looking at here? The 3 things, 405A, 1, 2, and 3. Of course, costs incurred specifically for the award, well, that's very clear. 1,000 orphans, I got 1,000 beds. There's no doubt. Bob Strauss calls this the but-for concept. Bob Strauss, global guru, 50 years of advice of teaching U.S. government people. He's now retired, but he called it the but-for concept. He says, but for this project, I would not have incurred the cost. Okay, very important. Next is costs that benefit both our one award, our USAID award, and any other awards we have. So a classic example here is rent. We've got one building. We've got the USAID project on the ground floor. We've got the EU on the upper floor. Right? How do you allocate rent? Rent is based generally. You split rent based on square foot or meterage on space. So I've got whatever. I've got 100 square meters on the ground floor. I've got 100 square meters on the top floor, and the rent is $1,000. Well, it's 50-50. Okay. So that's quite important. So there's different ways to, of course, we could have our financial management team, our insurance, our security. How are you splitting those costs fairly? And the whole point here is in this, you can proportion it based on some reasonable basis. So that's why rent is on space, HR based on headcount, and other things, of course, insurance based on value or whatever else. Okay, finally, this is the one that people don't get correct and don't realize. And I have to admit, USA doesn't clothe themselves in glory in the standard provision number 1, where it explains this. But the bottom line is the US government rule is if you must incur a cost to be in business. If you are working in Tanzania and there's an NGO fee. When we do your NUPIS or USAID does your pre-award survey, the first thing we look at is, do you have an internal control system? Do you have a ownership? Do you have a board that operates correctly? You need to be competent in that country and adequate oversight. Okay, so the whole point is if the U.S. government demands that you have this, then they're going to pick up their fair share. You just have to be able to document and justify it. So I'm just going to give you the note to where to go to find this one. Okay, here it's 205.4, 05A, 1, 2, and 3. This one here, this third one, where people tend, and frequently CDC says, we don't pay for that. Now, that's not our cost. They do. You just have to document it. So it's 405 subpart D. The second sentence very clearly says, if you must incur a cost, the U.S. government is going to pick it up, even if you have no logical way to proportion it. And so what we do, basically, we recommend that people do it based on the size of the project. Okay, because if you got to have a lawyer, he or she's not necessarily going to be billing you for the USAID project or the other one. They're just going to bill you. So we tend to say, okay, if you're going to pay for the statutory audit or the board and that kind of stuff, do it based on the size of the project. So if my USAID project's 10 million and my EU project's 5 million, then obviously you split it in that ratio. Okay, and this one just goes on to say, basically, the U.S. government does not want to pick up other people's overheads. So just please be careful to allocate fairly. Okay, next comes allowability. So we've had reasonable, allocable, and allowable, and this is 403. Now you're expected, all of you, to cut and paste 402, 3, 4, 5, and 6. 6 is discounts into your finance manual. As an auditor, I'm going to say, show me where you have documented your understanding of reasonable, allocable, allowable, and so forth. Okay. So the bottom line here is allowability. What costs are allowable? Okay. Now in the cost principles, there are only 56 specific costs that are either allowed or disallowed. And we don't have time to go through those because that's 4 hours just going through the cost principles. I mean, the full course certainly has that. So talk to FPD to sign up for it. But the bottom line is, or reach out to us directly. But the bottom line is so people say, oh, Doug, is this table allowable? Or is a bicycle allowable? Or is airtime for my community people allowable? And the bottom line is any cost might be allowable if it's reasonable in amount, correctly allocated, and not specifically disallowed. Okay, there are things that are specifically disallowed: alcohol, bad debts, certain types of advertising, certain types of entertainment, not allowed, clear in the cost principles. But there's 1,000 gray areas. And that's where, just take this down, your mandatory standard provision number 1B and 407 in the cost principles, both of those state, if you're not sure, ask. Okay, and your AO, effectively your agreement officer, will make a determination for you. And this is what I say. I mean, no one likes gray areas. As an auditor, I hate it, right? Because chances are you could have gotten certainty that things were allowable or not. You could put it in black and white from day one of the award. And that's where, if you do that, hopefully we will never find anything wrong with you. Okay, so allowability, and people say, oh, I put it in the budget, so therefore it's allowable. No, USAID plays by the rule generally that if you have a line item that says salaries, salaries are allowable. If you have a line item for travel, travel is allowable, but not necessarily the amount or the allocation. We've got too many people, we have too many findings where the CEO says, oh, I'm worth $200,000 because I put it in the budget. No, that's not true. The auditor is going to determine reasonableness. Okay, your job is to make things reasonable. My job is to determine, were you correct? Reasonableness, look at it. It's 430 in the cost principles. There's a couple specific rules there that you have to go see. What's the market value for you? What are you paying? What are other CEOs in this place making? So too frequently, no, they put it in the budget and so they accepted it. Wrong, okay? Auditors are going to determine if it's reasonable and allocable. Okay, I'm going to leave it at that for that. So which rules apply to whom? Here, I'm trying to make it quite easy. There is no light version on the CDC side. They have to apply, all the uniform guidance applies to US-based or non-US based. But most of us are probably foreign-based, foreign prime. And so when USAID gives you your award, the award is going to say, read me, read the award. You have to follow the non-US standard provisions and the cost principles. That's it. Okay. There are thousands of US government rules. If it's not in your award, it doesn't apply to you. And as an auditor, I can't say you should have done this because they're doing it. No, read your award. That's the concept. Bob Strauss would call that the four corners concept. Before we had digits, we had paper. And so an award came with four corners and many pages. For a rule to apply to you, it must be incorporated in your award. So too frequently people say, oh, you got to do this or that. And you very politely say, show me where that's in my award. I love being compliant. I'm going to be compliant. I want to be compliant, but play stupid. Say, show me, AOR says you got to do this. Say, I've read my award and I can't see where that's in there because chances are it's not in your award. So read your award, especially that the schedule or section A, that's where the AO is put in what applies to you. So you're a foreign prime, great. In Nigeria, Tanzania, Ethiopia, wherever, you've got a local sub under you. And what rules apply to them? The same rules that apply to you. You have to pass down, join our course on the 23rd. You have to pass down pretty much the same rules to the sub level. Okay, I think we're going to have a couple questions now. Okay, so let's try not to do the 10% de minimis ones because I'm going to try to, I think we may have some new questions.
Okay.
If we have any.
Value-added tax. If a purchase of good that attracts value-added tax is done without adding the value of the tax, can it be an allowable cost? Okay,
good question. So the rule on taxes, and I think that's 467, I think, cost principle, but go there. So the rule on taxes is if you must incur them and you cannot recover them, then they will be allowable. So in many countries, there's a VAT system. Here in South Africa, we file that every 2 months, and the receiver is quite good, and generally you'll get it back within a few months. Some countries don't do that. They have a system that says imposes a 15, 16, 17% VAT, and then you never get it back. In that case, certainly that VAT will be deemed allowable. The 17% or whatever percent you paid on top of it will be allowable. But unfortunately, for the first 4 years of your award, that's probably going to be sitting as a receivable on your schedule of expenditure. We used to call it a FAS, Fund Accountability Statement. Okay, so you got this money due back from the Nigerian government, due back from the Ethiopian government. You're never going to get it back. So what happens is we auditors know, and the mission knows. The mission has dozens of recipients like you. They know. Talk to OFM, talk to the controller. Saying, controller, are we going to get this back? Is it? Probably not. Okay, but then eventually at the closeout time, that cost will be written off and you will not have to, you can deem that to be an allowable cost. Okay, great question. Any others?
Yes, so we have a question. Are non-executive directors' fees allowable? These fees are charged per meeting attended by the directors. Okay, so the answer is yes, as reasonable. Now, where you'd find that is you go into cost principles, 2 CFR 200.430, and in there it specifically states, well, it says, talks about salaries,
for non-executive directors, but again, fees would tend to be allowable if they're reasonable. So what's a reasonable fee? Okay, generally, I sit on many boards, and the concept is you don't go to a board meeting unprepared. Otherwise, you're useless. So normally a week or two before, there'll be a board pack, and you're supposed to read it. So the general rule of thumb is you should get paid 2 hours of preparation time for every hour of board seat time. So if I'm going to go to a 3-hour board meeting, I would have at least 6 hours of preparation. And then I would be paid for the 6 hours plus the 3 hours, 9 hours. I'm not going to get $1,000 an hour. It should be something reasonable. Some countries make it, board NGOs aren't supposed to pay fees, but many countries they do. Okay, so yes, as long as it's reasonable, but document how you came to that conclusion. I mean, did you compete for board members? It's not like you're purchasing board members, but you should, in many countries, there could be some rates, not rate set. In South Africa, we have the Institute of Directors, which is essentially a director organization. I mean, there you might get a sense of what's a reasonable fee for someone who sits on an NGO board. It's going to be very different. You're sitting on a bank or sitting on, a for-profit entity where there's risks. There's very little risk of an NGO board seat. But 430, look in there, and that's where it's allowed. Okay.
The next question is, how should you react if a cost is reasonable and allocable, but not allowable? What should
then it's not allowable. I mean, it's not okay. So cost is reasonable and allocable. So reasonable. So I got a bottle of Johnny Walker Black for $10. That's very reasonable. Only the USAID team drank it at the party. So that's directly allocable, but alcohol is not allowed. Okay, so just because it's reasonable and allocable, doesn't make it allowable. It's got to be, for it to be allowable, it must first be reasonable and allocable. Good question.
Next question is, the attendee noticed that you said supported as part of the cost principles. Is this new or just for emphasis?
No, it's documented. Okay, I meant documented. So let's go back there. Let's go back to, sorry, let me just close my one thing here. It is adequately right here. Allowability, I highlighted it there, documented. Reasonable, allocable, allowable, and documented or supported. Okay, if I don't see it, it's an unsupported cost and questioned as unsupported on your CFA, formerly known as a FAS. Okay. All right, let's continue on, and I'll get to here because you're asking fantastic questions, but I do want to get through everything. So here is an example of what I'm your auditor. I'm going to put together an audit package. Who is the reader of an audit? It's generally the agreement officer, because she or he has to make a determination on whether they're going to accept your financial statements. Okay, so this first thing used to be called a fund accountability statement. Now it's changed to a CFA, which is consistent with the rest of the US government, schedule of expenditures of federal awards. So that is basically your income statement. I'm going to show you that in the next slide. Okay, so that is what we auditors give an opinion on. Say it says, Sustainability Solutions believes that XYZ organization, your financial statements fairly present what happened this year, that year. That's what it is. There's no balance sheet. There's no cash flow statement. There's nothing else for the US government under a yellow book audit. It is simply a CFA. What did I get? What did I spend? What's the balance? That's what we audit. And I'll show you that on a few more slides. Next, we will review your internal controls, and that's what the next part of this course is about, to see whether you had adequate controls over those funds. We do not issue you an opinion on internal controls. We only highlight whether the controls that you had over the funds identified in the CFA were adequate. Finally, there is a report on terms and conditions, and it's the same thing. Did you comply with those 354 or whatever musts that you were supposed to? Now, as I said, auditors, because remember, auditors are competing for your work. And if I said, I'm going to test all of those, my fee would be up here and my competitor's fee is down here, and I don't win. Okay, so that's why I'm saying most people normally will identify the most risk, financial risk conditions and terms, and that's what they're going to audit. Okay, but make sure, all I'm saying is, don't think you're going to get away with just spending the money and no one's going to look to see it. There's certainly most auditors, and there's a new process that just went on. That's ADS 591. If you want the actual document, again, we can send you that. That will be what 591 MAA is the actual total title. And that is what we auditors are going to look for when trying to audit you. Happy to send it to you. Okay. But the bottom line is your audit package is put together. One more thing, you must now prepare your schedule of expenditure. We auditors are no longer able to help you. And that's literally the webinar I'm doing here for USAID South Africa on the 9th. Sorry, today's the 9th. Anyways, next week on the 16th is how to prepare your CFA and the risks about that. Okay. You must prepare it. And if you can't prepare it, then you can't ask your auditor to, even though, we helped you last year or 2 years ago, can't help you. So realize now we can't help you. So if you can't do it yourself, then hire someone else, but you can't have your auditor do it. But in each of your countries, your mission, your controller should have a list of acceptable audit firms who could help you. Okay, I know Ethiopia has 6 on their list. South Africa, we have, I don't know, probably 5 or 6 as well. I've seen the Tanzania list. Uganda has a list. So just ask your controller for the list. Okay, that's all I want to say here about the CFA. Also, if we make recommendations as an auditor in the following year, you have to prove to us you've addressed or resolved those issues. Okay, that's what's going to go into your report. So here's an example of a schedule of expenditure. This comes from the new ADS 591 MAA. And the bottom line is you may have multiple awards. Okay, so depending on how you structure your CFA, it could be different. But the bottom line is you need to make it crystal clear so you've got 2 programs. How much did I receive and how much did I spend? For budget and actual for each program. Okay, that's what you need. So just be aware that unfortunately, the guidelines 591 show cumulative balances and stuff, which makes it very complicated. That's not a requirement. If you're in years 2, 3, 4, 5, you do not have to show cumulative results, cumulative budget, cumulative expenditure. Okay, they put it in there and they did a disservice because people say, oh, I must do it. I'm in year 3 of my award. I've got to show 3 years of budget and 3 years of expenditure. Not. Okay, I've had that confirmed with the writers of the document itself. Okay, I went to the AICPA, went to the Government Accountability Office, said, is this a requirement? They said no. Went back to USAID and said, well, no, it's guidance. Could be. But again, don't take everything you read in these documents as you must do them. Okay, so very briefly, in terms of auditing, there's going to be your organization, schedule something like this or structured. You've got your leadership. You've got your finance person, finance director, finance executive, whatever, the person who's probably your top finance person. And then under her or him is going to be your middle level things, HR, accounting, procurement, whatever. And then finally, the auditors and the clerks or accountants who do the actual transactions. On the auditor side, generally there's a partner. And again, having been a partner for 26 years, and still being a partner, that person does not get too involved in it, but because they're too expensive and they've been through it, they delegate the responsibility down to a manager and a senior. So the whole point here is if we had enough time to talk, and again, if you don't have it, ask your mission for what's called the recipient contracted audit process. Okay, that's what you want to be compliant with. You want to be compliant with the spending, and then have your audit done in accordance with the recipient, you contract your auditor. So you have to select these guys. It should be competitive. USAID, your missions have an acceptable list of auditors to choose from. And the important point for me in the next 3 minutes is to explain, you want to select an audit firm that 1 is on the list, and 2, forget about the partner. You're never going to see them. Only entrance conference, exit conference. You want to make sure you can get along with the manager and the senior. I recommend you do a Zoom meeting. If you're not going to meet physically, spend a half hour thinking, can we work with this guy? Because if you can't, your audit could be a disaster. They don't like you. You don't like them. You're saying it's all rules-based. Think again. Okay, personalities get involved and things like that. So make sure you can work with your manager and senior. I would ask when you get the proposal, I would say, partner, confirm that this manager who I've seen and I can get along with, are they going to be available for my whole audit? Because it could be bait and switch. They could say, oh, this guy's great. And he is great in the interview. Next thing you know, that's not who you get. It's like you get a dog that doesn't understand the rules. So you want to make sure that preferably, and again, that guy may be walking on water, okay? But she or he, if they've never done a Yellow Book audit before, you don't want them. Okay, now again, some of the new firms put on the list are new to the game. And so, well, you might only get someone who's new. But what you want to see is that firm is dedicated to giving you a good audit. Okay, the staff don't matter. They're just running around like cockroaches, tearing into your records, and it's, they're just a pain to deal with. Okay, but your manager, you want a relationship there, and the senior who's going to be supporting the manager. Those two, that's your team. Okay, I'll leave it at that. But get the recipient contracted audit. Again, Susan can send it to you, or I can send it to you. Study the process and understand the process. Take control of the process. It's your audit. Okay, finally here, we're going to have an audit finding. So here is what we are going to do. Our job, this is part of the Yellow Book or generally accepted government auditing standards. This is what is unique about a U.S. government Yellow Book audit. They're called findings. And our finding has 4 elements: criteria, condition, cause, and effect. The criteria is, for me to have a finding, I must have a criteria to point to in your award or in the cost principles that says you didn't follow this. Okay, if I must have a 2 CFR 200.430, okay, on salaries says your salary is not reasonable, or you didn't get competition, or whatever, or your controls were weak. I can't just say good governance is this or that. No, I got to prove you broke a rule. Now realize you could break the US government rule or your own rule. And unfortunately, if you don't follow your own written policies and procedures, that's a criteria. So too often primes give subs, sub says I need written policies and procedures on procurement. Prime says take mine. Okay. Well, if you're going to borrow or loan procedures, make sure they are implemented. Otherwise, you'll probably have a finding. Okay, it's nice for large primes, IntraHealth, to give us, a sub, give them their policies, but if you're going to give them to them, make sure they implement them. Okay, otherwise, frequently we get to a subrecipient and say, these are great policies, but you're not following these. You're not doing what they say, and they say, no, we got these from, our prime, and aren't they great? I'm saying, yeah, they're great, but if you don't follow them, then that could be a criteria. So be careful there. So criteria, what rule was broken? Condition, that's where we have to describe to the reader, who's the agreement officer, what happened. So we say, okay, we've got a project in Dar es Salaam, and it's 10,000 people on care and treatment, but they also have over in Arusha, they have a sub project that is 1,000 people. Okay, and then we find out that they didn't do timesheets in Arusha. Okay, so the condition is, okay, in Arusha on this sub project, so there was X number of people for X months at X rate, not preparing timesheets. Criteria at 430, again, I'm not going to get too deep, but there's a criteria that says you must document your work and charge actual. So it didn't do it. So the reader can sit there, the AO can sit in Dar es Salaam in the USAID office and picture in her mind what happened. In Arusha, a project was open, X number of people for X months didn't do timesheets. Okay, so it's almost like well, I'll leave it at that. The cause has to come from you, and this is where a lot of auditors make mistakes. They try to be clever and try to surprise you. Okay, you should ask for a no surprises audit. You don't want to be surprised. Those are bad auditors if they're going to try to catch you out and prove I had findings. That's wrong. We should never surprise you. Okay, so the cause is why it happened, and you have to have a legitimate excuse. Okay, every year for my sins, we belong to the Government Audit Quality Center of the AICPA. And in the last year, they highlighted that too frequently findings don't have an adequate cause. It's like management oversight or mistake. That's not a reason. That's not a cause. Management, in that example, if 20 people in Arusha didn't do timesheets, why? Isn't it a requirement of the company? Yes. Well, didn't they get indoctrinated or inducted? Maybe not. Isn't there a finance manager of that project looking over who he or she should sign off on the timesheets as well? Maybe. That's what you want to document. Normally, a cause is going to be a breakdown in internal controls. Okay. And it's my job to ask you and put into this. So this cause, although it's my finding of your weakness, it's your excuse why it happened. You provide the cause. And let me go back here. You have to make sure, recipients, that only one person or a few people speak on your behalf. Okay, don't let the auditor ask, as senior asks some junior guy, how did this happen? Okay, that's bad auditing. Okay, we should be asking you a relationship between the manager and the person who speaks on behalf of the organization, and that's what you define up front when you have your entrance conference with the auditor. You say, I'm the finance person. I give you the reason for the cause. Okay, make sure you do that. Otherwise, you'll end up in your draft report has something you say, where the hell did this come from? Oh, Joe, the new guy gave, he was the only one working with the auditors and he gave the answer. Okay, that's bad. Finally, the effect is if a finding can be quantified, that's what has to be quantified. So here in our example, X number of people for X months at X shillings, or all these things have to be in dollars as well, gets documented. So the effect would be there. So I'm going to go back up to the fund accountability statement here, okay, where we have salaries. Okay, you can see here, salaries. Here, if this were the case in that Tanzania example, I would have unsupported costs for salaries on this line item. Okay, because X number of people times X shillings for X period, I can quantify you did not support that charge to the US government. So it's in here, then again, you have to be very clear which project it was. But I would say, great, this was project number B, and you charged $213,000 for salaries, but X amount, 20, 30,000 of that problem at the offsite was unsupported. So that's what happens. Your job is to prepare the budget and the actual. The auditor's job is to question the cost as either unsupported or ineligible. Okay, I'm going to have some final Q&A here for this section, and I see we have again, I'll stay certainly till late, but I do want to get some Q&A here, and then jump into the rest of it. There's my email address. Again, we're happy to send you documents, or Susan will as well. Okay, Susan, what questions do we have to finalize this section? Okay, let me answer some of them. Susan may have a problem. So again, I won't necessarily get all of these, but let's see. Do the cost principles apply to the 10% de minimis? And are there any expenses not allowable for the 10% de minimis? Well, you don't have to justify what you're using the 10% de minimis for. The 10% de minimis is not auditable. So what I test as the auditor, that you calculated the correct modified total direct cost, and that, again, USAID only gave you, or the prime only gave you the right amount. But no, we do not audit what you use that 10% on. Now, the reason most people use the 10, again, direct and indirect costing is, it's a whole course in itself, but the concept is that USAID expects you, US government expects certain costs naturally to be overheads or indirect costs. So if we go to our example of here, I would expect the people at the top level would probably be indirect costs, okay? And possibly their assistants or PAs or that kind of stuff. The other thing that is not allowable as a direct cost is bid and proposal costs. Those are not allowable as direct costs. So that's the normal reason why people have a NICRA in the first place, but what you can justify what you use your 10% on. If you go to bids and proposals in the cost principles, the US government, incredibly generous. They allow you to charge as indirect costs winning and losing proposals for both US government and non-US government projects, right? So you bid, you spend weeks proposing for a large EU or Gates Foundation, and you lose. That's an allowable cost, okay? Now that could never be charged as a direct cost, but that would be the perfect example of why I'm going to use my 10% de minimis. Okay, fringe benefits for staff, are they allowed by USAID, like a 13th month? Or is the agreement between the prime and the mission that determines if this can be paid? No, they can be paid, and it would be, that has to be in fringe benefits. So closely look at 431. But the whole point there is I want to see this in your policies, and I want to see it in your contract, right? So yes, my contract says I get a 13th check, and the policies of the organization say, yes, we do issue the 13th check. But normally those policies would be reviewed by USAID, possibly, or the prime before they give you the, before they approve that. But can they be allowable? Absolutely. Okay, is the payment of honorarium allowable cost? If not, is there a specific guidance on this? Okay, what you need to do is look at the cost principles. Also, there is something called incentive payments, and they are allowed with 3 caveats. One, they benefit the program, okay, meaning they increase the production or reduce the cost. Next, it has to be reasonable in amount, and assume for USAID that would be no more than 10%. That's not written anywhere, but from working with AOs, they say, we're not giving incentives over 10%. And then finally, it must be determined before the incentive starts, meaning you can't give an incentive payment at the end of the year because it's not incentive. Okay, I'm going to leave it at that, and well, I'm going to carry on. Actually, I see your thing has come up, your evaluation. Okay, some of these are a little bit beyond what I'm going to have time for, so let me just let me save these until we get into the next session, which I truly want to get to, which is indirect costs, or internal controls. Sorry. Okay, internal controls. It's also known as the Green Book. Okay, it's put out by the Government Accountability. Let's just go to the next slide. Green Book is issued by the GAO, same as the Yellow Book. They put it out. They get updated every now and then. The current version was pretty much, it came into effect truly in 2015, but it's a 2014 version. And before that, it was only updated in 99. So it was seriously due for an upgrade. Why? What changed between 99 and in 2015? Technology, internet banking, social media, all that stuff changed significantly. But basically, from a banking point of view, technology changed how we do stuff. So it was sorely due for an upgrade. Okay, the structure of it has not changed, just the volume of it has changed. So I'm going to leave it at that. It's called the COSO framework, the Community of Sponsoring Organizations of the Treadway Commission, which is more, it was a for-profit group that set it up. And basically, it's when things were blowing up and Enron and all that was happening, and you heard of Sarbanes-Oxley. So the U.S. government use of the Green Book is the same thing, the same structure that the private sector uses as well. I'm not saying private sector is better or not, but it's a very robust and strong structure, and you should follow it. So what's the requirement? Well, I'm going to go to the second page first. So for USAID, it's the 2 CFR 200.303. That's where you'd go. I showed it to you earlier. And so what does it say? It says for USAID recipients, the non-federal entity, you must establish a system of internal controls. I'm not going to read this to you, but then it goes on to say these controls should be in compliance with this Green Book that I'm going to refer to now, this. Okay, you can get this at gao.gov. You can get the Green Book, get the Yellow Book. I'm happy to send it to you. It's quite a useful tool. So what do we have to do? One, you have to set up a system. Two, it's ABCDE. The control system makes sure that you comply with the terms and conditions of your award. Okay, that's what it's for. Three, it evaluates and monitors your compliance. So the control system must monitor your compliance, right? It's like a control over the control. D, it takes prompt action. You, the prime or sub, must take prompt action when the auditor or the U.S. government finds non-compliance. That means you must react to the findings that we've just talked about before. Your system of controls makes sure that you react and you address to weaknesses or other issues identified. And finally, there's something now called protected personally identifiable information. And your system has to protect the data that's in your system about maybe the people in your project or whatever. USAID does many things. HIV/AIDS is still a stigma, even though it's more of a chronic disease, but it's still a stigma for HIV and AIDS. Okay, and many AIDS programs, many U.S. government programs now are democracy and governance. Well, a lot of countries don't like democracy and governance programs, so you shouldn't have information that says Doug belongs to this organization, and he lives here, and his phone number's here, email there. That should never be in a place where, God forbid, your computer gets stolen or broken into, that they know Doug supports this organization. Gay and lesbian rights across much of the world still highly deadly, could be deadly if you're outed in certain countries. So you can't be. I worked with the head of the Gay and Lesbian Society project. I won't say which country, but she emphasized to me. We had dinner, and she said she was leaving the embassy one day where the meetings are held, and one of the people came up to her and said, "You do not know me outside of this building." Okay, because outside there, you're a foreigner and you're the head of the Gay Lesbian Project. If you know me on the street, I'm dead. Okay, that's the type of stuff that you got to be incredibly careful of protecting the information in your computers. Okay, so the concept of this is the yellow book says, or the green book, and notice literally it's from the Government Accountability Office. It says you identify objectives. Okay, your project is 1,000 orphans, 10,000 care and treatment, whatever, 1,000 hectares planted of maize, so much water put in, educating people. That's our objective. You design controls through this system to put in place so you can achieve those objectives. I got my M&E people. I've got my I know how to buy pipe, right? I've got the books for the education. I've got my outreach team. All the controls that are going to be put in place to achieve that, and they're in place and they have to be operating. That's why when things go bad, we fix the wheel. We fix it, we fix it, we fix it. And in theory, you'll achieve your objectives. But I say possible. Okay. The bottom line is if you don't have internal controls, you will fail. Okay. It's been proven time and time again, and it's basically through fraud that this happens. So I'm going to go through some quick things here. Does this guy look happy to you? We don't have time to debate it. Okay, he's not happy, and you probably don't know him unless you're English. I don't think we have anyone from England on here. Okay, his name was Nick Leeson. Nick Leeson worked at a bank, this bank. Do you recognize it? No. If that was your bank and your money was sitting in that bank in London, England, do you think it would be safe? You probably 95% of you would say yes. Remember the vaults down beneath there. So your money is in a vault in London where no one has guns. It's safe. Well, was it? Okay. This was Barings Bank. Okay. And Nick Leeson was the original rogue trader. And Nick Leeson traded derivatives. When if you saw the movie The Big Short, that's essentially not about Nick, but about what happened. So the housing crisis, he was investing in things and they lost $1.4 billion. And they went out of business. It didn't matter the Queen had her money in there. It didn't matter 317 years. It didn't matter the tellers at the front were so nice. It didn't matter that everyone had a password. One guy who was trading without controls broke the bank. Okay, so the reason I talk about, and I'm pulling up here, and again, this is all from our fraud. We've had the fraud webinar, Susan. I think that, I'm not sure we're going to have it again under this, but that's one you want to attend. But the bottom line is, the main reasons that fraud happen, it's called the fraud risk triangle. I don't think I go into further now, but 59% of fraud is caused by there being an opportunity to commit fraud because they had poor internal controls. So if you want to stop fraud in your organization, understand internal controls, have someone, a compliance person. If you don't have an internal audit function, outsource it. Again, we train probably 300 auditors a year, pretty much every firm. We give them their yellow book credits. Okay. And every time I ask, one starts tomorrow. Okay. One starts tomorrow, 24-hour course. And the bottom line is every audit firm who's going to be on your country's list will also do external, will do outsourced internal auditing. And it only has to be, I would say, a quarter, every quarter, they come in and do some sort of risk assessment and stuff. So if you don't have, so put it in your budget. Remember, I said the first domain we look at in your NUPIS is organization, and do you have internal controls? And so if the US government demands before they give you the money that you've got internal controls, then you should pay for it. Okay, but you have to know that and put it in your budget. Primes, put it in your subs budget. Okay, make sure, again, if you don't know what's allowable and you don't know you're going to incur a cost, then you're going to be in trouble. Okay, so the bottom line is most fraud happens because they didn't have adequate internal controls. So who does it? There's a whole process. The board gets involved at the very beginning and then hands it over to management, and management works with the whole organization to implement the policies. The board sets what's our objectives, where are we going, tone at the top, and what are our goals and objectives and mission, and all that gets set here. Their job is to help design, put it into place, and let management run with it. Okay, so what it would look like, you remember the rubrics cube. Okay, the rubrics cube is basically, well, of course it's a cube, but we have 3 sides that we look at. So first, and I think Susan, did you send them or put into the chat now? Maybe send the link to the our internal control checklist, which we've created for pretty much NGOs. We've modified the global checklist and made it a little bit more applicable to NGOs. But basically, there are 5 components across the front: control environment, risk assessment, control activities. 3 categories of your objectives. So our operations, so 1,000 people on, or whatever, 1,000 orphans, 10,000 people in care and treatment, 1,000 hectares planted, 1,000 kids trained, clean water, whatever all your projects are about. There's that component you got to figure out. There's the reporting component, internal, external reporting. What do we say to aid? What do we report to ourselves? What do we report to it could be a financial accounting as well. What do we, our audits to our Tanzania or Nigerian or Ethiopian regulators? And then finally, the compliance. So each of these little cubes has its own risk assessment, its own unique controls. Okay, and then going here, entities going from the highest level of the US government globally to Africa, to again, maybe USAID, to the controller's function in a mission. And each of those, again, would have its own aspect. Okay, so IntraHealth globally, and then IntraHealth maybe EMIR, and then all the ASAP projects, and then within the ASAP projects, M&E, what Susan does, communication, all of those are things. So what blew up in Barron's Bank? Well, one, they didn't know about synthetic derivatives, so they didn't do a risk assessment. Okay, so it's in this slice of the pie. Okay, they didn't have control activities either. And so basically he was part of operations, treasury department of a bank, and he was a very small function. So he was a function. So what was missing, if you could picture, there's a back of this cube down the back, if you could see through it, what was missing is they didn't do a risk assessment back there. That cube wasn't addressed, and there were no control activities of this slice here, the function. So back in the back there is what the one or two cubes didn't get assessed, brought the bank down. What could bring down your organization? That's what you need to know. So here's the 5 components: control environment, and then we perform risk assessments, and then you should be performing a SWOT, strengths, weaknesses, opportunities, threats. That would be an example of a risk assessment. Okay, obviously very, very, very short version of it. And then the control activities are the hardcore policies and procedures you put in place to make sure that it's operating. So this is where we change our passwords. This is where who has the rights to set up a payee, who has the rights to release a payment, who reconciles the accounts, who has the key to the safe. There's preventive and detective measures to prevent fraud. You should have both. A preventive measure is something that happens before the transaction. Okay, so all of us have an ATM card. You have to have a card. You have to have a PIN. Okay, and frequently now you need your cell phone and other things to do business, but those are all controls. Okay, information communication, GIGO, garbage in, garbage out, right? You got to know what information your organization needs and what information U.S. government needs, in this example, to be successful. And finally, the system monitors itself. So what happens is there are these 5 components which turn into 17 principles, which turn into many what's called many attributes. We don't have anywhere near the time to go through this, but I just want to show you the results of some of these that we've done. Okay, I'm going to go here, and then the Q&A can come at the end. So these are real life examples. Normally we would go, we either do a 1 or 2 day course, And it's great when normally you have the accounting firms and you have maybe US government people there and many NGOs from different types of NGOs. And basically I've sent you the checklist and you do some self-analysis and you try to see, how are we? You assess yourself. Am I strong? Am I moderate? Am I weak? Or is it non-existent? Okay. And then you talk about it. That's the beauty of the course. We did it in Nigeria. Some of you may have been. We did it at the FHI building, which is a massive training room. And after 2 days, they wouldn't leave the room. And I said, why? This course, we're done. No, we're not done. We still want to discuss. So if you may think controls are like dreary and boring, but I can promise you, when you get into it and understand them, this to me is a life skill. It's a life skill like learning how to ride a bike, learning how to drive a stick shift, learning how to swim, learning how to do anything that once you know it, you know it. Internal controls should be seen this way, because wherever you are in your career, if you're retiring next month, you may not need to learn internal controls. But if you're a young person, but wherever you are in your career, always think, if you understand your environment, then when you move to another environment, if you understand the control structure, you'll be a better employee. Or if you leave and start your own NGO or whatever else, the more you learn about control structures, the better you get. Okay, and that's why for the auditors, I'm so happy for them that they're going to be going to 10 different organizations in their each year for the first 3 years. So after 3 years, they'll have seen 30 different environments, and then they have comfort and confidence when they walk into another organization. I've seen this, I've done this, I got the T-shirt. Okay, that's what I'd like you to think about internal controls. So here we did an African organization. It was at a Big Four firm, but they had their NGOs and they had a Ministry of Health person. Now, we never say the country, we never say who's, all this is anonymous anyways, even during the course, but we're able to evaluate it. And the whole point here was, we said, okay, great. But you'll notice the green here was quite weak. And we said, well, okay, but we're not going to talk about this. This happened to be a very senior person in the Ministry of Finance of that country. And I said, well, we're not going to talk. He says, no. He says, I want future participants to know that was us. I said, well, okay, great. I'm not going to say the country, but he says, because we don't have any money. We don't have any time to do all these risk assessments and stuff. They're weak or non-existent. Whereas, of course, over on the left here is going to be your auditing firms who are hugely structured. Nothing changes in an auditing firm. We do audit, tax, consulting. That's it. And NGOs, of course, are different depending on what they're doing. Okay, so that's an example of that. Here was an example of, we went for many years. Each year, we went to Washington to do these courses at something called the Consortium of Universities in Global Health. Okay, I won't say who participated, but any large medical group that you know, a university or research organization participates. And so we did the course there. Now, other than this first number one is basically the management assessing themselves. How strong are we at our goals and objectives and tone at the top and doing the right thing? Of course, they're strong. Then look how they evaluated themselves for everything else. Moderate to weak. Okay, look at again, for enforcing accountability week. And I won't say which, but some of these organizations were dealing with Ebola and they were saving lives. And these are the top universities in the world. I'm saying, how can you evaluate yourself this way? And they said, that's the reality. We don't do this stuff. We don't do risk assessments. We don't do this. Well, maybe, but I'm not saying maybe they don't, but management wasn't aware and certainly hadn't participated in these things. This is serious management. So, the whole point is, I'm not expecting you all to be super strong here. Okay, what I am expecting is that you go through the process or even outsource your control structure to, even at some minimal level, get some sort of controls in there. The following was an example where up here between Pretoria and Joburg, there's a good venue for it. And so this had mainly Big Four audit firms and a couple of NGOs. And so you can see here, again, audit firms are going to be very structured, they're very control oriented, and of course they have strong controls. Okay, but the bottom line is, going back to these universities, leading universities in the world, they'd like controls, but is there time for it? Is there the interest in it? Of course they can save a life. They know where the EKG machine is, they know where the X-ray machine, best doctors in the world, but they didn't necessarily have the structures in place, when you looked at controls. Okay, so with that, I'm going to answer. So again, there's my email. And Susan, do you want to go with the final questions, or would you like me to to take them through.
Totally up to you, Doug. Sorry, I had a little technical glitch before, but I am back.
Okay.
I shared the PDF for the Green Book questionnaire that you mentioned. So that's in the chat if anybody wants to go ahead and download that. And we'll
Thank
also
you.
use it on the website tomorrow when we load things up.
Fantastic. Okay. So I'm going to now go through the questions that I still see. So we talked about the difference. Well, someone asked, what is the difference between the 10% and the de minimis? No, it is a 10% de minimis. Okay, that's distinct from a NICRA, negotiated indirect cost rate agreement. Now, just a little history on that. You know, in the States, anyone who works for the government can get the negotiated indirect cost rate agreement. But overseas, because many organizations don't know how to ask for one, and agreement officers, regardless of how fantastic they are at being an AO, many of them are not specialists at indirect costs. And because the US guys are not willing to do negotiated rates for foreign entities, there's a chance that you're not going to get a NICRA. So the bottom line is you should certainly ask for the 10% de minimis and understand, as I said, understand how to what goes into the base and then what you can charge on top of that. It is a 10% on top of something called MTDC. Okay, can we use the 10% de minimis for cost overruns? I think that says onerous, but I'm sure that's not what you mean. Can we use 10% de minimis for cost? I'll say overruns, i.e. when the amount budgeted is lower than the actual. Can we use the 10% to cover it? Well, you could. But be careful. One thing: never spend more than the obligation in your award. Okay. Now, yes, let's say you've got a $10 million project. This year you're going to get 10, and so the AO is only going to obligate you chunks. I'm going to give you 3. When you're close to finishing that, I'm going to obligate, meaning make available another 3, and then I'm going to obligate until. But you should not spend more than that obligation, because that could lead to disallowances. Okay, if you want to use your 10% to do more good to further the project, certainly that's allowable. Okay, but you shouldn't have to. That 10% isn't meant for program activities. Could be, but most people wouldn't use it for that. Okay, what audit fees are allowable for a subaward with less than $750,000 in government funding? None. Okay, the US government doesn't want you to have a project less than $750,000 audited. But if I'm the prime, you better make sure that you are correctly managing that. So let me just say this. Okay, I am the prime auditor. Okay, you have a sub. Now that small sub, is not going to be audited, but I am going to give an opinion on you, the prime, and all the money spent under you, which includes the small subs. So before I put sustainability solutions on your audit report, on my audit report of you, I'm going to make sure you correctly manage those subs, because in that sense, they're not audited, but I, the auditor, am providing assurance to USAID that those funds were correctly spent. They're not supposed to be audited. It's a disallowance under number 425 cost principle. It's a disallowance to have costs to charge audit fees for projects that are not supposed to be audited. Just FYI, the CDC threshold for foreign entities is 300,000. So again, if you get CDC funding and you spend more than 300,000, you'll be probably having a separate CDC audit. That's a whole nother discussion. But yeah, just realize their threshold's different. But anything less than the threshold should not be audited. Okay, excellent question. Okay. Could you further clarify what is termed a reasonable cost? What are your thoughts of vendors with extremely inflated costs, which is something I think happens when they know the project is USAID funded? Well, great question. It's your job, recipients, to document for the auditors that they were reasonable, that you went out and got market related costs, that you went out and got 2, 3, 4 quotes, whatever your policy is. So that's what we're looking for. And again, I spent 10 years auditing in Afghanistan, and there, one of the requirements of the mission was to perform vendor analysis and go out and check that the prices were in fact reasonable. Okay, so that doesn't happen in every mission, but certainly if the mission believes that it's a corrupt environment, or exactly what you said, inflated costs are going to be incurred, then they could put that in the auditor's scope of work, if you will. Okay, next question. A purchase is done for a project activity. The service is rendered, but the procurement process shows some weaknesses. For example, the required number of quotes was not met. There was no segregation of duty in the process. Is this purchase an allowable cost? Okay, so that would be deemed either, well, I'd have to know more about it. That would be deemed either ineligible or unsupported. But that for sure is questioned. So what happens? We write it up and it goes to the agreement officer, and she or he will have to make the determination. So if you showed me, pretty much you tried, and again, auditors really don't weigh in. It's not our job. Our job is to recommend to you, the recipient, to fix the problem. Get more quotes, do this or do this. But ultimately, the agreement officer. Now, let me just say this: USAID, I think, is incredibly generous at allowing costs of their NGOs. Okay, CDC would hammer you. They'd say pay the money back right off, because CDC is a domestic agency, and in America, CDC gives funding to organizations that get possibly funding from elsewhere. So CDC, pay back the money. Okay, USAID doesn't do that, and especially when it's a new NGO, the AOR will probably work with the AO to say what happened here, and chances are, I would say possibly in year 1 or 2, they would allow that cost, but they're going to check to see, did you fix it in year 2? And if year 2, we auditors come in and find the same thing, that makes it awful difficult for the AO to approve that. That's what the IG is doing. They're overseeing the AO, saying, are you safeguarding U.S. government funds? Okay, you gave them some leniency in year 1, maybe again in year 2, but if I was the AO, I would be talking to that AOR saying, get these guys to comply, or else, we may have to terminate or suspend them. Okay, good question. The instance that an audit has been completed and submitted to the mission, still stating that a cost has been disallowed after supporting documents have been provided by the prime, can the mission act as a go-between to review this claim? Okay, I'll read it again. The instance that an audit has been completed, I'm assuming a sub-recipient audit, and submitted to the mission, still stating that a cost has been disallowed after supporting documents have been provided by the prime, can the mission act as a go-between to review this claim? Okay, so that's why there is the OFM, the Controller's Office, Office of Financial Management. The AO doesn't want to deal with this. They have to make a decision. Okay, this could be a totally different discussion if we're talking about a prime and a sub. So let's just stick with the a prime getting audited. Your job, recipients, is to document for the auditors. Your job is to document to me your costs are reasonable, allocable, allowable, supported. Now, frequently, you don't find every document, and I need it. So let me go back to, sorry, let me just kill this. Let me stop this, go back here. You're still sticking on, so I'm assuming you still want to hear this. So let's go back to this one. Okay, let me know if that, sorry, it's the yellow book. Let's go to the green book. Let's do a new share, this one here, okay. Okay, let me know, Susan, if the bubbles are up.
Yes, they are up.
Okay, so what I'm saying is, in this sense, right, you are here, and my job as an auditor is the manager is going to come to you and say, it's missing, okay? And you, assume you're the finance guy, you should be constantly communicating with the auditor saying, how am I doing? Do you have everything you need? Is anything missing? Okay, now I would be a horrible auditor if I lied to you, or if I tried to catch you out saying, we know you don't really have something, but I'm not going to tell you. That's poor auditing. So you should regularly, I would say again, an audit would normally take between 5 and 8 weeks for a normal sized recipient. Okay, if we can't get it done in 2 months, then we're not good auditors. So the whole point is, as a partner, my managers would be saying to you, this is missing. Auditors don't want you to have a finding. It doesn't help you. It doesn't help them. Okay. And of course, if we are bad auditors, you're going to badmouth us later on when someone says, oh, we need an audit. Say, don't use those guys. They were horrible. Okay. So my point, my people would say to you, it's missing, find it, find it, find it. And then what happens, get that recipient contracted audit process. What happens is generally about 3 or 4 days before we're going to issue you your draft report, we sit down with you and say, we put all the cards on the table. Now, by this time, you should have already heard me say it's missing, it's missing, it's missing. But at that point, we're going to say, here effectively are the findings that are going to go into your draft report. Find it or don't complain when you see the finding. Okay, so there never should be a time where what you have said happens. Now, what could happen, again, getting a bit, I don't want to go too late because again, my power is going to go off maybe in 35 minutes. But the bottom line is that it's possible that I issue you with a draft report that says stuff is missing. Okay, and then you come up with it. Okay, you've got 30, normally read the recipient contracted audit process, but we agree at the entrance conference how much time we auditors are going to give you to reply those comments, right? Here, let me just finish this slide. Okay, we have a finding, criteria, condition, cause, effect. Then we make a recommendation to you, the recipient, to deal with what we just found. And so in our example, we said in Arusha, they didn't have timesheets. Our recommendation will be implement policies to ensure correct timekeeping and reporting. Okay. And then management recommendations, management comments is normally you would say, well, you would probably say, yes, we agree, we will do this. Okay. Now, but let's say that the criteria was you bought you must support documentation, right? We talked about allowability must be documented. Condition was you bought a generator and we don't see any proof of it. We hear the generator, we see it, right? But we don't see that the process that you bought it. The cause, well, it's missing. Okay, we don't, the dog ate my homework, flood, fire, COVID, whatever excuse, still we don't see it. Okay, what's the effect? Well, you don't have proof. Our recommendation is to get proof. Find it, please find it. And so then, 3 days later, you find it. Now what? Okay, so we don't have time to talk about it. Historically, when the Inspector General was driving this, the Inspector General's guidance to the auditor was, once we submit the draft report, we should no longer do additional auditing. Okay. Now I think that's a bit cruel because I'm your auditor and I want to help you. But the bottom line is, if you don't come up with the goods until the draft report, you don't realize how much that changes the report, and it's a huge challenge to modify our draft report once it's done. That's why the rig tried to protect the auditors, saying stop auditing. Okay, just put it in the give the mission of the report that says the stuff was missing, and they let the mission sort it out. So generally we wouldn't do that. What we would do is we would probably look at stuff you came up after the fact, but we wouldn't change the finding. The finding would say after the fact, after the submission of the draft report, the client or you came up with the documents, and here's what it is. Okay. We wouldn't remove necessarily the whole finding. So the agreement officer would at least realize that, for a period, you actually couldn't come up with the documentation. Okay. Okay, let's go to any additional questions. I'm hoping this is helpful to you. If the finding related to journals, for example, a journal entry forms not approved by relevant official, is supposed to be included in the audit report. Okay, excellent question. So again, this course only has so much time, but there will be, when I talked about the audit, let me go back to what's the structure of an audit. Okay, so here you'll see the CFA. This is the components of your audit report. Okay, there's the main report, and then what happens in our report on internal conditions and terms and conditions. Okay, we also identify where there were immaterial weaknesses that we found. 3 timesheets not submitted, 2 quotes not obtained, that kind of stuff. That goes into what's called a management letter, and which we call it the rats and mice report. It's the report where immaterial, generally non-financial items go. Okay, and so that's what would happen. So as I said earlier, our job as auditors is to identify where you have done something wrong that could have an effect on the financial statements. But there are many other important things that keep agreement officers awake at night that they want to know about as well. Maybe there's child abuse on your project, or maybe there is minimal fraud, or maybe there is handicap mismanagement. Okay, or we have you got to read your standard provisions, but there's things that say, okay, it's working with sex workers and prostitution and many areas where the agreement officer doesn't want these things to happen. It puts them at risk. So you've got to manage these things. So they want to know when you're not doing something, even if it's not necessarily financial in nature. So your job is to be compliant, get your award, search for musts, identify a compliance person in your organization. That doesn't mean she or he's going to do all the compliance. He or she's going to be a structured person who loves spreadsheets and giving to-dos to people and managing those to-dos. That's what you need. And then you'll probably be compliant. Okay, these are great questions. So again, I'm loving it. So next, any say on the NDAA section 889 compliance must do? Does this apply to subs? Okay, I think you are referring to what we call the Huawei exclusion, and that USAID's got a waiver on that for 2 years, and I understand they're trying to get the next waiver. So many of you would have got, this is when Trump was still in power, and he put an executive order saying contractors are not allowed to use certain Chinese equipment, Huawei and Hikvision cameras and things like that. Okay, and but for cooperative agreements, what you would have probably had to do, and this is very difficult. I mean, I worked with AOs to try, how do we please you, USAID? And there's not a huge amount of guidance out there, but I would have expected you to do an IT survey of all the equipment that you have and figure out, do you have any Huawei equipment, or more the camera stuff's called Hikvision and other things, and at least document that. Then you say to the mission, here's what we got. Okay. Now, USAID, as I said, overseas has a waiver that you don't have to comply, but the US government's not going to enforce that. Okay. But conceptually, you should not buy new equipment if you can avoid it. Okay. Meaning if you can use some other device or some other blade in your server and stuff like that, do not buy that equipment. Okay, that's all. Again, one could go on and on that, but the waiver's there, and in many countries you cannot avoid this equipment. In South Africa, here where I am, Huawei is the backbone for the government. Ethiopia, Uganda, I think many of those Huawei is the backbone. So you cannot avoid using Huawei stuff, but neither can the mission, neither can the embassy. So I mean, you just do your best to avoid using that equipment that is effectively bad. That's also, well, I'll leave it at that. How can we calculate MTDC? It is very clearly in your mandatory standard provision, requires applicable number 5. They give you the definition there. It's also, if you go to the uniform guidance, the section that has acronyms and definition, it's alphabetical, so look at M and you'll find MTDC. Okay, are fraud investigations costs allocable and allowable? Okay, great question. What's the fraud investigation for? Okay, so basically there's a cost principle that says if you incur legal costs where you could have avoided them, then the US government's not going to pay for it. But if you are incurring costs to protect the US government, and that would be possibly there's a fraud that happened that happened to you. And we didn't talk about whistleblowing, but again, there's whistleblowing, and then great. Now you are maybe doing investigations on that. Those could be allowable. Okay, if you're protecting, certainly if you're going to sue the US government, not a chance. And so if those legal fees are against the government, no. If they're to protect the government, maybe. Okay, again, that's what go to number 407 in the cost principles. That shows you, I think, 26 situations that you must get prior approval. So use that number 407 as a cheat sheet, if you will. Could you tell us about US government, USAID rule on losses from fraud? Okay, I will say this, fraud happens all the time. Okay, and in the mandatory standard provisions, I think it's M26, what it does say, this is quite, I'm glad you asked this, because the rule is, if there is fraud with US government money at the prime level, prime, you must notify your agreement officer and the IG in Washington, right? Fraud with US government money, federal funds, you must notify your AO who gave you the money and the IG in Washington. Fraud at the sub level, the sub must notify the prime, who's ever serving as the AO, whoever gave them the money. They don't go to the USAID prime. They notify the prime's AO, and they have to notify the IG in Washington, okay? If there is fraud with non-US government money on your project, and I think that's standard provision number 12C, you have to notify your AO. Okay, and the bottom line is the AO wants to know, what's happening and why did this happen? And did it happen with our money? Could it happen with our money? Okay, that's what they're going to do. But there's fraud frequently happens. I mean, I was chairperson of a NGO, large NGO for a couple of years. And basically there was fraud. And, we said to US government, it was fraud at the sub level, as a matter of fact. And we were worried that we were going to be, we would have the money held against us. And, I think as long as you do your best to prevent fraud, and that's why internal controls exist, then they're not necessarily going to hold it against you. Okay. In that case, we said, well, what are you going to do? They wanted to know what we're going to do with the fraud. And we said we were going to terminate them. And they said, good. We said, why are you saying that? And because, US government needs examples every now and then of where people who commit fraud get terminated or suspended or, go to jail. And that's what, I'm not saying your job is to put people in jail, but when we study the fraud course, you need consistent communications of what's right, what's wrong, and what happens if you commit fraud. And I think it's not beyond fair to say if someone commits fraud, you terminate them. Some countries, fraud, and people don't think anything of it. We had an NGO somewhere in Africa, unnamed country. The guy committed fraud. The NGO prosecuted. They sent to jail. Got out 2 years later, came, knocked on the door of the organization, said, I want my job back. He wasn't assuming that, he did his time and therefore, get the job back. So I think you need to make it crystal clear to people, that's not going to happen. Okay, what documentation is required for subs to justify the 10% de minimis rate? And does this require USAID approval? What I'm going to do for you now, I'm going to go here because I've got the uniform guidance up. So let's just go there together. Okay, let's go here and I'll show you. Let me show you here. Okay, so we're in subpart D. I'm going to go back. Show me, Susan, if I'm showing you the uniform guidance.
Yes, we're looking at the
subpart E. Great. Let's go down. 414 indirect costs. Part E, F. Sorry, F. Okay, here's what it is. So as I said, this is the 10% de minimis allowance. So any non-federal entity does not currently have a 10% de minimis or has a NICRA may elect to charge the 10% a de minimis of MTDC. Okay, this part was added more recently. No documentation is required to justify. Okay, so but does that mean it's free money? No, as a taxpayer, as an auditor, I'm not happy with that. What I suggest to the missions is ask the recipient to prove to you this next sentence. Okay, as described in 403, which is allowable costs, costs must be consistently charged, either directly or indirectly. Can't be double charged. So I don't want to see you saying I'm using the 10% for rent and then you have it in your other direct costs, or inconsistently charged as both direct or indirect. So what does that mean? That means to me, you create what's called the cost policy statement, which shows the mission you understand the difference between direct and indirect costs. That to me would be sufficient. To make me think, all right, you're not going to misspend these funds or screw the US government. Okay. Great. Okay. Let's see what else we have here. I hope that helped. So let's go other Q&A. Can you confirm the negotiated 10% de minimis rate is revised to 8%? No, CDC has an 8% rate. That's okay. What I'm going to take you to, we're still in the uniform guidance. If you went to the CDC version, 45 CFR 75.414, they have in their C here, they've got C1, and then they have beneath this, they say basically non-US organizations can get the 8% indirect rate. They don't call it a de minimis. right? And literally, I may have a conference call tonight with CDC to resolve this, but in Atlanta, is I don't think they think that's a de minimis. And for them, that 8% is basically an indirect cost that would be auditable. So that's what CDC allows. Okay, they don't allow the 10% overseas, unfortunately. Any common audit findings on paying allowances to government officials? Okay, good question. So basically, the U.S. government normally has rules about say the 10% de minimis. They have rules on dealing with government officials, and so that's not going to be NGO specific. It is going to be normally the government of Uganda or Nigeria is going to say, here's what we allow. Normally, you can't top up host government employee salaries. And then normally the minister is going to say, if I'm going to come and talk at your conference, I want this and this and this. If that's your situation, talk to your AO and AOR, and they'll probably talk to the regional legal advisor, and they'll figure out what's allowable in your country. I mean, that's going to be very country specific. Okay, certain employees of implementing employees who were dismissed because of not complying with the vaccine mandate policy of the organization took the company to the CCMA. They are claiming unfair dismissal. Can the organization recover some of the legal costs incurred from the USAID program? Okay, I mean, that is going to be country specific. That is going to be employee specific. That's a tough one. I do know that USAID and the US government, the whole OGAC people were that's Clint Kavanaugh and his team in Washington, who every week put out guidance on this. But I'm not saying I'm surprised, but I think USAID was pretty generous at allowing organizations to continue to pay their recipients salaries during COVID. So in that case, in theory, I think if you were going to terminate your employees, you should have been talking to your AOR, and he or she may have weighed in on this. But I mean, that's quite specific. I think you could have a problem there for terminating people, and they probably have a right to say you shouldn't have dismissed them. And I would think USAID may have said, well, why are you dismissing them if you don't have to? Again, that could get very legal. I can't give advice on that kind of thing to 200 people still. Okay. So thank you for the answer on fraud. Specifically, when do we have to reimburse? Well, the whole point is you may not need to. Okay, what you got to realize, everyone, every 6 months, every agency of the US government goes in front of Congress and submits a report called the SARC, Semi-Annual Report to Congress. So the USAID IG is going to go to Congress, and they have to explain all the things that the auditors found all around the world. Okay. And so assume every finding that we would say, every finding over $1,000, we will report, but they'll set a higher threshold for what they report to Congress. Now, historically, USAID has been very generous in that between the last time we had an analysis done, let's just say between 80 and 90% of the question costs and findings that we have and submit to the missions get submitted to Washington, about 80% of them are still allowed. Okay, so USAID that would never happen at CDC and some other agencies. They said, pay the money back. You stole it or you had a problem. So all I can say is, again, fraud is never good. And the last thing you want to do is try to hide it. Okay, because if you hide it, certainly eventually the truth gets out and the organization gets hammered. But I would say if you explain why they had the fraud and everything you did to try to protect the government, and the controls you put in place to make sure it doesn't happen again, I think there's a good chance that they will allow that cost. Unfortunate, fix the problems, what they're going to say. Okay, what is the difference between grant and contract interim of AOR involvement? Okay, well, remember, a contract is something totally different. First of all, a contract is a contracting officer, and a COR, and they are going to be on you to demand performance. If you don't perform, you don't get paid. You don't get your profit. I wouldn't worry about that. But from an AOR, I would worry about it if you didn't do it. But under a cooperative agreement, the AOR is substantially involved in your award. Okay, when the AO gives you your award, they also create what's called a designation letter. And that's where the AO designates authority and responsibility to the AOR. You need to get that letter. The first thing you do is read your award. The second thing you do is read the designation letter, because that tells you, the recipient, what authority and responsibility has been given to your AOR. It's about 16 pages. It's definitely worth reading. And that's where it also talks about when you're going to get evaluated after the end of the project. But I would, if I was a new NGO, or if I got my first award, when I go to the entrance conference or the meeting with the mission, I would say, I don't want to wait 5 years for the last AOR to evaluate me on 5 years. I'm taking my auditor hat now. I'm talking on your behalf. I would be saying, I would like every 6 months or year to be reviewed by the AOR, because I could be great for 4 years. You get a switch and something goes wrong in year 5, and next thing you know, you got a bad rating. Okay. So I certainly think that you need to get the designation letter. As an auditor, I'm going to get it because I need to know what authority has been delegated or designated to your AOR. Okay. Excellent question.
We're at the top of the hour now, so I think we
okay.
might close out if that's all right.
Okay, well, that's great. So, I mean, my power is going to go out here in 5 minutes anyways, but let's see if there's anything else, Susan. 4 more minutes, I've been told here. Let's see if there's anything else, Susan, that I haven't touched. I did promise to try to address all of these. And again, so someone, gave us your actual line items. And I think the bottom line there is, in both of those situations, you don't have the 10% de minimis, and you probably don't have the NICRA either. So in that case, remember, if you're writing it down, absolutely, you go to justify, to get all your funds. First, if you're new to the game, talk to your prime, talk to other NGOs, figure out what costs do you guys have. NGOs are generally quite friendly with each other, unless you're directly competing. So go to the FHI's IntraHealth saying, what am I missing? When I talk to the USAID people, I'm saying, if you're not looking at a submission without thinking what they've missed, you're setting yourself up for a headache in the future. People underestimate the audit fees. Okay, a yellow book audit is going to be more expensive than a statutory audit, just because the hoops we have to jump through. Okay, a prime doesn't realize until too late that they have to manage the subs. If the subs are weak, they have to strengthen them. You need the money, primes. You must go to 332 D and E, and you're going to see that you out of the prime award have to use your funds to strengthen weak subs. So all I'm saying is, but how do we justify that? In your proposal, I would have, of course, you're going to have here's my activity-based costing. I'm going to have 6 evaluators in this region. I'm going to have the cost of 6 evaluators. Okay, but when you get to these gray areas, what you need to do, I would have an extra column in my budget, and I would highlight there, cost principle says this is an allowable cost. Okay, not reasonable, allocable, it's allowable. But then I would also say, where it's not specifically clear that this is an allowable cost, I would ask in the proposal, not ask, but I would identify, we are highlighting that this cost isn't clear, and we are asking you, hopeful AO wannabe, that you will allow this for us as an allowable cost. Okay, so again, look at 407, or that's better to look at, cost principle 407, or mandatory standard provision number 1, the very first provision, point B, raises the same issue. It says, if you don't know, and I've asked AOs, I said, isn't this going to be painful for you? They said, absolutely not. They said, we're not in the business to give an NGO money so we can take it back. Okay, that's not their business. They want you to spend the money correctly. It's harder to take money back from you. The headaches, the tears, the appeals, the disputes. It's hard. That's harder than giving you the money. So don't let that happen. So study prime. What you really primes. If you're going to take on subs, and that's the risk assessment. That's 332B. That's when you have to perform that NUPIS on the subs. That's where you should figure out, are these guys going to be a basket case, or are they going to be great, or where are they in between? And even for you as a prime, you earn extra points by being able to show in your proposal We did the review. And sometimes now USAID is sort of suggesting to primes, can you take these guys? We want you to be an umbrella grant manager, a UGM, right? So your job is to grow these these subs so they can be primes in the future. This whole localization. Well, be very careful, especially if USAID, not that they recommended a bad group, but you shouldn't take on, wounded NGOs, or if you are going to, take them on with eyes wide open, knowing it's going to cost. And then you can say that. You can say, we're going to have to strengthen these subs. We'll take them, but we need extra funds to, over and above our normal costs, we're going to need extra funds to support them. Okay. I'm not sure, Susan, I think that was it. I did promise to do everything. And so I think that is it. So with that, guys, you had hopefully you had my email, and Susan's got an email, and ASAP. I want to close by thanking first USAID for enabling you for them to put this on through the ASAP project. Susan, you, Fikre, and certainly Jeff behind the scenes doing everything you can to make this successful, and all the participants who endured this 2-hour flush of knowledge. I hope it was enjoyable, or at least helpful. And as I said, so there's other webinars coming up, as Susan mentioned. Foundation for Professional Development has a program. And certainly we do these every month, the full-blown version. So you're getting the executive version of it. If you think it would be helpful, just send us an email. Susan, anything else? Do you want to close?
Yeah, thank you so much, Doug. That was a lot of info, but as you can see in the chat, people are thanking you for it and saying it was worth every second. So thank you so much. I went ahead and put the registration for Doug's next ASAP webinar on March 23rd in the chat. So you can go ahead and click through and get pre-registered for that one. Thank you again so much, Doug, and everyone have a wonderful day.
Okay, cheers all, be safe.